Whenever you're ready, Marty.
Thank you. We're waiting here to see if we can get a quorum
You have a quorum.
of the Finance Committee.
If you look straight ahead.
If
you've
we look
got-
on the screen, Barb says we have a quorum. So,
Yeah.
We don't have a quorum for finance clerk.
Don, Sean, Dave. Oh, That's
Steve was
fine.
on a minute ago.
mm,
Steve, Marty.
Oh.
mhm.
Okay.
still trying to queue it up here.
Mhm.
Good morning. I'll call the meeting of the Finance Committee to order. And was it properly posted?
Yes, we were, Mr. Chair.
It appears that we have a quorum of Finance Committee members in person and on the virtual screen. So I will ask someone, we have a very short agenda. It's mainly going to consist of administrator reports. I don't have a copy of the agenda in front of me, Clint, but I have made a space for public comment, have I not?
Pull it up right here, Mr. Chair. It's going to show up on your screen. So you do have a 9-point agenda, as Assistant Dahl just mentioned. You have public comment underneath 9, agenda item 9.
Okay, so that would be at the end of the meeting. And if we have enough public and many people want to speak, I'm going to limit public comment to like 2 minutes apiece and see what happens, see if we can get through it. But I did insist on having public comment today because Clint's going to lay out some information that will be both dramatic and hopefully not news to anyone, but certainly he'll tell us, and I call this the state of the county. You know, the governor gives the state of the state, the president, the state of this is the state of the county. And Clint is the guy that has knowledge of the money, which is basically what we're talking about. So I would invite the public to take chairs on the side or in the back or even at one of the tables. It's okay. This is an open meeting.
Mr. Chair, this is Sean. I'll make a motion to approve the agenda.
Okay, whoever spoke, I did not catch it. Would you repeat, please?
Yeah, this is Sean. I said I'd make a motion to approve the agenda.
Yeah, thank you. Thank you, Sean. And seconded by Melissa Luck. All those in favor of approving the agenda signify by saying aye.
Aye.
Opposed, no. All right, we have an agenda.
Mr. Chairman, this is Don Seep. I'm signing in.
Yes, Mr. Seep. Thank you. We had you before and then we lost you and now we have you again. So,
Thank you. Always
Great.
have a little difficulty here.
great, thank you. So without further ado, maybe we'll go to the first agenda item, which is administrator report.
Yes, we've got kind of 3 main items that we have on there with the conditions report of the county, followed by financial planning, capital planning, and recommendations. They're all kind of melted into one presentation today. We do kind of have transition points, and I would ask Mr. Chair if you can help kind of gauge the audience and if it's appropriate, whenever you feel it's appropriate on those transition points, if you want to take a small recess to digest and allow people to get some refreshments and breaks, and then we can
Okay, well, we do plan on having a lunch break, which I would guess will be around 12, I would think, whenever there's a break, like Clint says, a transition. For one thing, I have to go home and let Derek's dog out because I'm taking care of Princess Gigi while he's in Italy. So there you go.
Don't know if I have a slide for that, but again, we could probably hit it on a transition point.
Okay, so, yes,
He's really muffled.
Okay, can you hear me talking now?
It's your mic or
My voice?
it's muffled and it's not.
It's not, how about now if I back up a little bit? Maybe I'm too close to the microphones.
Maybe turn on.
Can you turn down the nasally sound too? Better there? Okay, thank you, thank you.
okay, I'm gonna move to the back so I can see everything that's going on up here, but I'll come back.
Okay, thank you, Mr. Chair. So today we've got an extensive report to lay out. Let me first introduce kind of the team that helped put this together. Derek Kalish, who's our county clerk financial manager, helped put in some of the work on here on the financial plans related to the county budget and our account managing. We have Jeff Even here, our county treasurer, who's going to talk with us today in regards to our cash on hand and our investments. Assistant Dahl is here as well. She did some investigation on kind of comparing us to other counties. She'll be presenting later on in the presentation. We have notes and bullets here from Carol Worth, who is our municipal advisor. She helps us with our borrowing and management of different, essentially all of our borrowing, whether it's with bonds and notes. Bill Moyleen will be joining us around 11 o'clock. Bill is going to be giving us kind of a perspective on our auditing and our budget performance. And then we do have a couple slides and some information here from Troy Magid, who's our executive director with Southwest Regional Planning. So thank you to all those folks, and of course to all the departments for your support and your input in bringing all this information and recommendations together today. The outline for today's presentations, kind of the main objectives that we're trying to reach here today is to first present a financial condition of the county as assessed through the county administrator and the supporting staff, which we just addressed. Number two, to review the county's position as adopted through the 2022 budget. And that will be most important to review that, as that kind of sets then the context for our projections going forward into the future. Number three, to present a financial forecast on the operational and capital needs, desires, and goals. Number four, the administrator's recommendations in meeting these operational and capital needs. Number five, the administrator's proposed resolutions to the county board. And then number six, prepare finance and personnel for discussion in July. So beginning with authority. Why is the county administrator coordinating this condition report and planning? As established through Wisconsin State Statute 5918.5, it calls for your county administrator shall annually and otherwise as necessary communicate to the board the condition of the county and recommend such matters to the board as its consideration, as the board's consideration, as the county administrator considers expedient. And then we also have language that arrives in the county administrator's position description underneath the financial reports and plannings, where it says makes regular reports to the board, keeping the board fully advised as to the financial condition of the county and its future financial needs, recommends such matters to them for their consideration as deemed necessary or advisable for administration and coordination of county functions. So those two kind of elements is what we ran with the authority to conduct this and to present it here today. County board investments, you have spent multiple hundreds of thousands of dollars in increased administrative expenses through my position and the addition of Assistant Dahl to arrive at this today, with having this type of information presented to you, of having a proposed plan and having levers then to maneuver and manage under the discretion that you see fit. And then you still, though, are retaining control through your committee structure. The structured document tasks the Finance and Personnel Standing Committee with oversight of financial matters and budgets. So this isn't quite in a runaway administrator type of an effort. I certainly have my opinions to present to you today, but your check and balance on it is through your Finance and Personnel Committee and then on to County Board for adoption. So the financial condition of the county, the data we'll start with here today is provided by Derek Kalish, County Clerk and Finance Officer. First, we'll start with just kind of a big pie understanding of the county's expenditures. So this is out of our $36 million, $36.25 million 22 budget expenditures. Now this is really just capturing the expenditure side of the house, but you can see kind of how the pie is broken up. Keep in mind, like a health and social services is also including your expenses from Pine Valley, And again, this is just kind of put in context of where your expenditures are. It doesn't account for your revenues and necessarily where it's coming from property tax levies. It's just on your expenditures. I'll give you a minute just to run your eyes kind of through that. Can we see it in the back? Nobody can really see. If folks maybe want to move up, I don't know if I can make it any bigger. The materials will be are out on the website. I don't have any handouts, but if you want to move to the front so you can see a little bit better, I apologize for the small print. So county revenues, now this is the other kind of half of the puzzle, if you will. Our county revenues come in the form of majority of them from public charges for services. You also have a little bit from regulation compliance, intergovernmental transfers, which are coming down through grants, either from state or federal or other types of entities. Taxes at 6%, highways, commercials, and other governments. So this is kind of your revenue pies broken down for you. And again, you'll see kind of the difference in your expenditures of $36,000 and $25,000 in revenues. Then that $10,000 in change then is what we're imposing through a tax levy to make up the difference. Okay. So we talk about the tax levy at 2022 was at $10,447,277.17. The distribution of the levy broke down roughly into these following funds of where it was all allocated for. The per capita charge per county resident for 2022 tax levy out of 17,304 residents that we had on our census equated to approximately $603.75. And again, we've talked about it in finance and personnel, but our accounting system is broken down into the different funds to manage all these different funds, with the general fund being the largest. That includes a bulk of our departments, and then we have different specialized funds depending on the needs of the department or the program. Taking a look at operational levy, so our property tax is our largest local revenue source and accounts for approximately 40% of the county's revenues. You can see the figures there of the $10,447,277.17. That accounts out of our total revenues of $25,820,428.31, so about 40.46%. The net new construction values have been linked with our increased property tax since 2005, and we'll talk about this often today. We have a limit on how much we can raise our tax levy based on a formula with that net new construction. The levy limit worksheet completed and submitted to the Department of Revenue annually after the budget and levy are approved, and Clerk Kalish handles that on behalf of the county. Most of this form is completed by the DOR with information they've already provided to us. The county adds in debt service amounts. The levy limit worksheet provides total allowable levy. Factors such as our TIDs, our tax incremental districts, net new construction, personal property aid are included in the formula as part of the overall levy calculation. So you can see our operational levy has grown a little bit from 2014. We were at 6,311,000 and change. And in 2022, it rose to $6,618,000. Our debt service levy, same type of numbers there where you're looking at how much we're levying each year annually for debt service. In 2014, we were at $117,000. By 2022, we're at $3,593,000. And this attributes to some of the borrowing that we've done with Pine Valley, with our 2018 borrowing, and then also including our $1,050,000 short-term notes that we're including now. So transition, let's talk about our conditions as kind of seen from the perspective of our municipal advisor, our debt service, and our county borrowing. Our municipal advisor, we're contracted with Wisconsin public finance professionals to help us manage our existing debt, ensure compliance with mandated reporting, and help the county find financial solutions when considering the use of borrowing to fund public projects. Our Wisconsin professional finance professionals operates under the management of Carol Ann Worth, president and sole owner of the LLC, Carol is a professional with extensive experience in working exclusively with Wisconsin public finance. Carol has over 40 years of experience working exclusively with Wisconsin municipalities and school districts to accomplish their public finance goals. She has career experience in Wisconsin, which includes employment with various broker-dealer firms as a registered representative and registered principal to manage their public finance departments in Wisconsin. So she handles us. She's been in front of the Finance and Personnel Committee several times and also before the county board, I think as recently as last month, where we moved forward with a authorization resolution for a radio tower project. So the notes that Carol sent along today to help us in understanding our financial condition kind of starts with the socioeconomic indices. The county's socioeconomics are factors in assessing our credit worthiness. So these are different numbers that Moody's would look at when they're assessing our ratings and also then potential buyers for our bonds and our notes. Our 2010 census, of course, had us at 18,021 citizens. By 2020, the recent census, we've dropped now to 17,304, or 4% decrease. Putting that in context, the state of Wisconsin dropped from didn't drop, but increased from a 5.6 to a 5.8. So we're not kind of keeping pace with the rest of the state when it comes to our population. I think we all know that, and we've discussed that in several different meetings. When we start assessing then a factor of home values, which factor into the equation of our millage disbursements and also our legal limits for borrowing, we take a look at Wisconsin County for the median age of a home. We're at 45.8 years. And the value of that home, median value again is $141,800. And a median household income is about $52,052. Putting that in comparison again with the state of Wisconsin, we're a little bit over on the age of our houses. We're under on the median value, and then we're under on our household incomes. We start talking about tax base, some notes here. Richland County's tax base includes 16 towns, 5 villages, and 1 city. Richland County's tax base includes 4 tax incremental districts. So we have 2 in the village of Viola, and then we have 2 in the city of Richland Center. And so a tax incremental district is a mechanism that local municipalities can use to help fund for developments. Essentially, it's taking the tax incremental difference between the value of a property before the project and after the project, and using that incremental difference to pay for infrastructure improvements to allow for that development. So while though you're paying that incremental district over the life of that TID, you don't then experience that inflow of increased value to your school district and to your municipality and to your county. But then when the TID closes, then that added value then appears on your tax base. The county's tax levy is calculated on a valuation of the county minus the valuation of the tax incremental district. So we're at with the TID out and the TID out, or TID out and TID in, we have 11,715,700 of tax incremental value was subtracted from the county's base in 2021. So the county's 2021 equalized value with it out is $1,336,382,500. The city of Richland Center has determined that TID number 4 will terminate this year. The value of the incremental value of $5,877,200 will be added to the Richland County's tax base for 2022. So that is a good news, and it should help bring up our tax revenue slightly. The village of Viola's TID number 3 has reached its maximum life, and then TID number 3 value of $647,600 should be added to Richland County's tax base in 2023, which is also will help. Tax base growth, to understand then the equalized value and how that's moved over the last decade. In 2012, with our TID out, we were at $1,013 million. And then kind of looking across that for 2021, we're now up to $1,336 million, or a 32% increase in equalized value. Kind of the same then, looking across then with TID in, we're at a 27% increase. For 5-year growth with equalized valuations, again, just looking over the shorter term, we're at a 22% increase and a 19% increase on equalized value. The tax base and general obligation debt. So Richland County's existing general obligation debt is secured by the levy of taxes on all taxable properties in the county, which we kind of talked about. The county may incur general obligation debt so long as the principal amount does not exceed 5% of the equalized value of taxable property, the legal debt limit. And why that's in place is to help counties from runaway type of deficit spendings. It establishes a base of 5%. So if you imagine, we talked about the worksheet that gets sent off for your total levy. One of the exemption languages in there is for debt service. So you have your operational levy limit that's set in place, or your total levy amount that you can have, but going through a borrowing allows you to kind of circumvent that level, or kind of go off to the side and raise that debt for debt services. But then that outlet, that valve, is kind of capped then at 5% of your total equalized value of your tax base. General obligation debt is authorized by a 3/4 vote of the county board members elected, and is not subject to debt service tax rate limits or levies. So like we talked about, it's not subject to the limit again, with the exception that you can't go over 5% of your equalized value. And like we saw in last month's meeting, county board meeting, to approve the $8.5 million authorization resolution, it requires a 3/4 vote of the county board seated members to do that. So it's not 3/4 of those folks in attendance, but it's 3/4 of all county board members in order to engage in that type of borrowing, and then taxation. Under Wisconsin law, taxes are repaid debt are levied without limitation as to the rate or amount. So you can adjust your rates on how fast you want to pay back interest and principal and impose that onto your tax base. Of course, with the check and balance being that all county board members are elected by the people. General obligation debt existing. So our outstanding general obligation debt issued for county purposes currently has these types of numbers associated with it. We have 2020 taxable GO refunding bonds, several types that you'll see out there with final payments due in 2025, 2027, 2028. We have OG general obligation debt issued for Pine Valley purposes, due in 2035, 2023, and 2036, amounting to the 17 million that was still remaining there. So totaled with our general obligation for general purposes and with Pine Valley, our total outstanding general obligation debt currently is $21,865,000. Pursuant to Wisconsin state statute, the legal debt limit of the 5% equalized value would allow the county to engage in borrowing up to $67,404,910. So our legal limit remaining is roughly 67%, or $45 million. We're doing okay, Mr. Chair? Okay. I don't know if we've referenced it specifically, all the different Green Book informations, but yeah, that's another good resource to.
67, it sounds like we've got a lot of space. Where is it in the counties?
Currently, right now, for our debt service levy, I think we're #1 in the state per capita on our debt service issuance. But again, that kind of comes down to that we went in with a Pine Valley borrowing of, at the time, well, existing yet of 17 million. Now moving forward, the radio tower project will also kind of solidify our position of being out in front. But again, it's kind of one of those projects that we know that we need. So our general obligation debt existing, if we take a look at the annual principal and interest payments for all county general obligation debt, it looks like this over the next, until 2036 at $29,712,533 for all interest and principal. Now, though, we're also looking at long-term issuance of $8.5 million of general obligation debt for the radio tower project. And these bonds would be issued in 2022 and repaid on a long-term 15-year obligation to the county. In working again with Carol Worth, we're trying to wrap that debt around our existing debt, meaning that with this added 8.5, we would try to defer most of the principal to the later half of the 15-year payments and pay interest on this end as a way to not, to try to disperse the impact on the millage rate. We're also potentially, I'm going to be recommending today, we still engage with our $1,050,000 short-term general obligation notes that we've used for the last 2 years. The short-term notes are repaid within 5 months of the taxes and are levied outside the levy limits. This program has been successfully used by the county for the past 2 years by providing funding for capital projects, creating room in the operating budget to maintain staff and programs, and preserving the county's general fund balance. Ultimately, a significant factor in the county's recent bond upgrade. So engaging in the short-term borrowing, we've displaced things again outside of that operational levy limit ceiling and put it into a debt service realm for a lot of what was historically considered like our routine types of maintenance. We've engaged in road maintenance, fleet management for the sheriff's department, some of our IT and computer needs, roof repairs, some of those types of things that historically we've done out of operational levy, but again, bumping up into that ceiling, we've kind of now deferred it into a debt service levy. So this schedule here now is looking at, it reflects the combination of the existing estimate debt service impacts of the borrowing of the 8.5 in 2020, and then also still taking out the $1,050,000 in 2020 for short-term notes. So this kind of shows the disbursement on what that would look like, the schedule out through 2037. And then adding the two together with existing debt that we have in place, this is the schedule then that would reflect all of the county's debt. And it also then kind of calculates in an estimated 2% annual increase in the county's equalized value to kind of project what the proposed legal limits would be for remaining debt that we would have to be able to use in addressing our capital needs. So if moving forward with the $8.5 million tower project and keeping the $1,050,000 notes in place, you see that moving forward then from our current of 63% capacity, it's going to put us at 54% capacity, and then we'll tick away at that about every 3 years with the assumption then that we're still going to continue engagement with the $1,050,000 borrowing. Okay. Future general obligation debt. So how does this, what does this mean for our taxpayers? If we take a look at budget year 2022 with the actual debt service levy of $3,593,193, budget year 2023 going forward next year to include the debt service for that radio tower project and to include continuing in the short-term notes that we use, you're looking at a levy increase of approximately $211,798. So then total disbursement of that against the 2021 equalized value, and granted that will kind of creep up a little bit coming into this next year, but against the 2021 equalized value, it amounts to about a 16-cent per $1,000 of property value, or $16 increase on $100,000 of property value in order to engage in that borrowing to execute those projects. So note on here, as we just talked about, an increase in the 2022 equalized value would produce a potentially a lower rate. So maybe that creeps down a little bit, but we're probably talking fractions of cents at that point on the $1,000. For the budget year of 2024 and thereafter, the combined estimated debt service of tax levy remains at approximately $38 million, including the issuance of the short-term notes each year. So those are the assumptions that the schedules are built on, and those are also the assumptions that we're going to be talking about when we talk about our capital projections, and the recommendation today are also based on those assumptions. So how does this mean for our reputation in the bonding world? So Moody's credit rater, May 2022, they did issue us an upgrade in the county's bond rating. We moved from an A3 with a negative outlook to an A2 with a positive outlook. Some of the bullets that led to their decision on this upgrade was a stable tax base trends, a trend of improved general fund liquidity. Essentially, we have more cash on hand to help us with contingency or emergency responses to unforeseen types of expenses. Materially improved financial profile at the nursing home with their revenue streams in, and that we've allowed them to operate and build up a contingency fund and their own capital fund has put the nursing home kind of in a position where we're hoping that they're not in the near future and hopefully never that they're going to be coming to us with emergency types of needs to fund either operations or capital improvements. The rating positives, all debt is a fixed rate. There's no variable rate debt. We have rapid amortization of debt at 81%, retired in 10 years, which means that we're paying off our debt and we're not just reissuing out more bonds on old money, if you will. Our rating upgrade acknowledges the potential issuance of the $8.5 million project. So this increase, Moody's was made aware that we were looking at this project. So this rating would carry forward then as well if we were to go into a bonding. As we mentioned, the improved financial liquidity and likely to remain stable for the next 2 years. County management reversed financial trends, including bonding for highway projects and redirecting the levy to reserves, reducing health and human services spending and implementing tighter expenditure controls across the department. So these were all the notes that Moody's put into place that they thought were good things for the county that influenced them to up our rating. So the rating negatives, though, that we still have in place there is long-term trends of aging population. They counted against us, as well as contingent liability risks associated with the nursing home ownership and health and human services. So the two big things known out there is when we talk with our nursing home operations is always, can we meet census and can we make sure our beds are staying filled? We have some operational risks there. And then, of course, with health and human services, the constant conversation of never knowing if we're going to have perhaps like adult or child placement costs, which are going to rapidly and quickly increase our expenditures from levy. Our 12-year history with the Moody's rating changes. So just kind of a review on it. From 2010 to 2015, we were at an A1. In 2016, in December, we were downgraded to an A2 with a negative outlook. 2017, A2 with a negative outlook. In 2018, in March, we were downgraded to an A3, and they removed a negative outlook. In 2019 to 2020, we were at an A3. And then now we've progressed back up to an A2 with a positive outlook. And so our history, again, when we talk about liquidity, our unassigned general funds, and perhaps maybe kind of to put it as our least restricted general funds of monies that we have in contingency, but in which we can legally use for maneuvering on contingent type of projects, has increased. Carol also wanted to make sure that we were addressing that the county has approved additional revenues that are generated from both sales tax and wheels tax. You can see that our county sales tax at 8.5% has generated the following revenues from 2016. And then our wheel tax beginning in 2019 has generated these types of revenues. Wheel tax right now we have dedicated and kind of earmarked specifically for resealing, for highway resealing projects. So trying to keep those monies taken from transportation purposes going back into transportation needs. Okay, so that kind of is our perspective in the points that Carol wanted us to make sure that we know in assessing our county financial condition from her perspective. We're going to kind of transition now into a county conditions report on budget performance. I don't know if Bill has joined us here. Let me see, is Bill Moyleen online yet? Bill, are you out there? Don't see him. So maybe we'll temporarily skip Bill. We'll move forward. We're going to move forward just a couple slides. We'll get into understanding funds, cash, and investments. And then we'll see if Mr. Moyling is able to join us. I think he said he was going to join us at 11. So we'll see if we can connect with him. So moving ahead a couple slides here, let's take a look at funds, cash, and investments then, and kind of understand the different. Oh, I got to share again. Thank you. Thank you. Okay. Sharing PowerPoint. Cash and funds here. There we are. So when we talk about county funds and fund balance, there's kind of a couple different ways to look at it. So we have our financial system ran through the AS400 system, which keeps track of all of our different funds and our budget. And that's a little bit different than what Jeff will talk about with our monies that we actually have invested and on hand with the bank or invested through LGIP or PMA, which he'll discuss here in a little bit. But first, kind of looking at how our financial system is put into place. Richland County has approximately 100 different funds. Some of these funds are composed of several different departments. Fund number 10 is kind of our general operation fund, and we operate that for 99% in a lapsing type of a fashion, which means in general fund number 10, we budget for year 2022 with the amounts of expenditures that we're expecting to put out and our amounts of revenues that we're expecting to come in. And at the end of the year, we lapse those accounts. Differences in balances are carried into either contingent or into undesignated levy fund, and then we reset those limits going forward. Most of our other types of funds then for specified projects are what are considered non-lapsing type funds, and those kind of build up almost like a savings account, checkings accounts, where the funds then are added for each year or potentially can go under for each year too, and it keeps a running total on your expenditures moving throughout multiple years. Fund balances are lapsing or non-lapsing, like we just talked about. Lapsing funds function on the use it or lose it type of a framework. These funds are reset with each new budget year. Non-lapsing funds retain their balance going forward year after year. A cash trial balance report is generated at the close of each month. A portion of this report can be seen to the right. These figures are a snapshot of our changes in financial transactions as they occur. So, and these are produced for our oversight committees to view monthly and for departments. And again, it kind of runs down on the value that we're tracking on how much availability is there for each type of a fund. Now, this is kind of slightly different. Now we're going to transition from our accounting system and how we have things broken down by fund to where the money is actually stored on behalf of the county. And I will turn it over to Treasurer Even to help guide us through that.
Alrighty, as Clint said, I'm Jeff Even, I'm the county treasurer. I am here to present kind of a 10,000-foot view of how our total on-hand cash is managed within the county. So this is difficult to see from the back, but the way we manage the overall cash within the county is not that dissimilar from how you would manage your household finances. Obviously, with expenditures of 36 million and revenues of close to 26 million, there's a few more moving parts involved. However, all of our cash is housed essentially within two institutions, one being the Richland County Bank here in Richland Center, the second being the Local Government Investment Pool, otherwise known as the LGIP. So the checking account with the Richland County Bank, that is our main operating cash account used for all expenses and revenues within the county. It is insured through the FDIC up to $250,000, and the county purchases an additional $2 million of collateral to give us a total of insurance of $2.25 million. So long story short, we try to maintain cash balances no more than that amount to ensure that should some catastrophe happen, our funds are protected. So then we move into the LGIP. The local government investment pool is kind of a melting pot of all of our funds. Think of the checking account as a melting pot of the 100 funds that Clint has just described. The LGIP is the melting pot of the melting pot. So we have a number of different accounts within the LGIP. The first I will touch on is the general account, which essentially is the savings account for the county. So you think of your home finances, you have your checking account, you write your bills out of, you receive your paychecks. You have your savings account that you store your excess monies in, things you may be saving up for in the future. That is our general account. This is essentially maintained, the balance is maintained through the ebb and flows of funds from the county checking account. So as I said, we're insured at 2.25 million within our checking account. Should funds exceed that, and we're not expecting or forecasting significant expenses coming in the near future, monies are transferred out of that investment pool into our checking, or out of our checking account into the investment pool. I try to maintain as just good, as a good faith, a minimum of $1 million within our checking account. Should we dip below that and I'm not forecasting significant revenues coming in, we will wire money out of that general account back into our checking account to keep us in a good financial sound position. This is done in coordination with the clerk's office and the administrator's office to try and forecast and anticipate activity coming up to minimize moving money around unnecessarily. So that is one account within the LGIP, one of the melting pots. Then we move down to the LGIP where we have various accounts. There are specific funds within the county that we house in separate accounts on their own, such as our short-term borrowing, our capital improvement borrowing, our ARPA funds, and land info grant. This is kind of helped to maintain separation of those funds and tracking, and those are replenished back into the checking account monthly per reports received from the county accounting supervisor.
Change it.
Which button do I push?
Yeah. Otherwise I can just flip it. There we go.
Okay. I cannot operate a pointer. All right, so this is kind of a broad stroke overview of the LGIP accounts. On the left, we have the total local government investment pool, which houses our general account and the individual funds. So all in all, in our broad stroke savings account and the large, in total, the LGIP, we house about $17.6 million. As we look to the right, this is our general account. You can think of our general savings account that operates with the ebb and flow of funds from our checking account. This is broken up in different factions as well. We house about $15 million within that general account of the LGIP. However, that does not mean we strictly have $15 million that's just hanging out there. There are earmarks for this. So the county does maintain through each department contingency funds such as Pine Valley Highway and a few others that we kind of have to earmark out as not available for general use. That is about 14.5 million. We have our uncollected tax levy. So the county levied around $10.5 million in taxes this past year. As of our lottery settlement in March, approximately 3,025,000 remain uncollected. Just as my opinion and being prudent, that should be recognized as its own kind of quasi contingency fund, just for the sake of if tomorrow comes and we don't receive one more cent in tax revenue, we need to keep that as kind of safe in our coffers. And then the big green chunk of pie in the bottom, or big gray chunk of pie in the bottom left are settlement payments that we will pay out in August. So how taxes kind of work within the county, you pay your first half taxes to your local municipality. If you live in Richland Center, by January 31st, you make your tax payment to the city of Richland Center. At the end of January, they cut us a check to the county, to the school districts, to the tech schools for a percentage of funds that are due to each governmental organization. Come February, the same thing happens again. A second payment is received. Then everything is turned over to the county for collections. We do the collecting for the rest of eternity until the next tax year. However, come August, there are still balances due to each municipality, each school district, and each tech school. Come August, we will pay out about $5.4 million to these entities. So within this roughly $15 million, we need to keep set aside $5.4 million as an accounts payable in a sense. Again, Should tomorrow come and we not receive any more tax payments through the end of the year, we need to be able to honor that obligation. So that is what we call our investment account. Historically, that is how the county has invested their monies. And it is through what is called the Local Government Investment Pool. This is an entity that is administered and managed by the Wisconsin Department of Administration. It is formed in the mid-1970s, and like government, it doesn't have a very creative name because it is what it is. It's strictly a vehicle for small government units, villages, cities, counties, school districts to pool their money together to invest in a higher rate of return, to be able to chase some of these larger interest rates. However, it is essentially a typical savings account. The pros of this are it is a high liquidity of funds. We can withdraw funds from this account any given day of the week. The only time we are limited, should there be, every government, every stakeholder in the state decide to withdraw at once, just like a banquet practice, there would be limits. But on the whole, we're able to move funds back and forth as we need. Of course, if you know how a savings account works with interest, we get a pretty abysmal rate of return on this. Just looking back, as of our May statement, on $15 million in our account, we received just shy of $8,000 in interest, which is 0.62%. That's the highest I have seen since I've taken this position. Most of 2022, we have been receiving interest rates of 0.16%, and that is up from a low of last June of 0.04%. So it pays more than the 0.03% we receive from our checking account at the local bank. However, it is not a great investment consideration if you're looking at rate of return. So as the county treasurer, part of my statutory responsibility is managing investments on behalf of the county. At a prior state treasurers conference, I had reached out to a firm called PMA Securities. They are a financial advising firm that specializes in government units, school districts, and they operate much the same as the LGIP. They invest their funds primarily in treasury bonds. It is a very safe vehicle to work with, and they do have high references from other counties that use them. They do offer a range of portfolios ranging from short-term to long-term. They offer portfolios similar to what we receive through our local government investment pool. You can go to the next slide, Clint. So I did compile a brief comparison of potential investment options. I tried to make this palatable, as exciting as a basic spreadsheet can be to most people, but I did add some color. So through a straight $1 million portfolio, a $1 million principal balance, the money market at the top, the very first one, is their equivalent of our local government investment pool. It's their equivalent of how we currently invest our funds. As of May 31st, this is kind of the apples to apples comparison. PMA, through the entity which is called WISC, which is their money market arm that deals with the same type of entities the LGIP deals with, they're returning an interest rate of 0.764%. So on a 1 year note, or if we left that money in there for 1 year, we would see an increase of about $1,400. Keep in mind, a money market is very liquid, so therefore the interest rate changes almost daily. However, the principal amount is protected. This is where we start to see the difference though as we move forward into specific short-term portfolios. We go to a 3-month, the interest changes, almost doubles to 1.2%. We see a different potential rate of return of an additional $5,800. Moving on up, obviously, the longer you let them hold your money for, the higher your interest rate is going to be. At a 6-month term, we're looking at $10,600 in additional interest compared to the LGIP. As you can see, the LGIP, the green line does not change because that is the only fund that is available through them. That 0.62%, which also changes, is also highly variable, but on the whole, a pretty low rate of return in the investment world. And this continues all the way up through a 12-month, a 1-year obligation, a 1-year investment portfolio. We could see an increase of $16,500 of additional interest beyond what our current investment practices are now. You can expect at the next Finance and Personnel Committee, I'm currently working on a proposed package of how my thoughts are of how we could invest, a portfolio package that both maximizes our potential rate of return on these investments through interest income while still maintaining an adequate amount of liquidity to ensure that our county is has an adequate amount of funds available for day-to-day operations and contingency considerations.
Thank you, Jeff. Back up here, and I don't know if Mr. Moyleen, if Bill was able to connect with us. Bill, are you out there? I don't hear you if you are, so I'm going to pitch your slides. My apologies if I destroy your information, Bill. So we work with Bill Moyleen. He is one of the senior auditors with Richland, with Johnson Block Company, and he conducts our annual audits with us. So he has led us for several years now as we've worked through Johnson Block. We've had a terrific relationship with Bill. The purpose, today we're going to talk about the purpose of the audit, what the auditors are looking for, and what are the deliverables of the audit. Kind of looking at our performance trend, again, we're looking at our property taxes. This is a little bit of the same information we covered with Carol to help kind of bring out on understanding our year of property tax levy. And as it's kind of laid out here on a graph, it helps show your property tax that you're imposing on your levy. You'll see the jump from 2020 to 2021. And again, that's incurred because of our debt service levy that we're putting on and that added expense. We start talking about our tax certificate receivable balances. So this is our outstanding types of taxes for collection. That number has went down, and that's been a good thing. That means that we're receiving and we don't have outstanding taxes that are existing out there. So those are all good trends to have. This one creeping down. Richland County financial performance trends based on equalized value. This is a nice graph, again, that kind of captures some of the talking points that we had in Carol's slides. It points to the increase in our overall equalized value, which again has to do then with your disbursement on how much impact is going to be for your millage rate on thousands or on $100,000 of property value. This graph kind of helps lay it out there on the transition from 2013 to 2021. We start to take a look at a graph then with sales tax revenues as covered in our previous slides as well. You can see that there's an increase like we saw across most of the state when the pandemic hit. We saw a lot more folks buying locally, and we had an increase in our sales tax. We're projecting sales tax to probably still remain on an uptrend. Not sure on that's going to be an accounting from the volume of purchasing, but you start to add the inflationary facts on the cost of services, cost of production. It'll probably stay up in a dollar type of value. So review of understanding the county's net position. So when we talk about local governments, it's important to understand from a county perspective that you're working on a modified accrual basis, which means that when you're trying to take the snapshot on gathering where the county's position is, you put some assumptions into place. Unlike a private business, you don't necessarily carry forward like encumbrances. And with a local government too, you don't kind of carry into your net position your total outstanding debt that you would have out there with principal, because you do have that luxury of imposing taxes, which are pretty stable type of a mechanism. So you're able to kind of then defer off long-term debt into short incremental types of debt services for each year. So overall here in order from the most restrictive to the least restrictive, you see your non-spendables versus our restricted funds versus our assigned funds versus our unassigned funds, and you see then the different balances and the changes with those for a total government fund balance of approximately $8,225,133. But again, this kind of coincides, now these numbers are taken out of the financial system when we're talking about all the different funds and all the different accounts that we have. But the numbers, should and do loosely coincide with the numbers presented by Jeff when we start talking about the actual dollar amounts that we're accounting for having in cash on hand and with investments, and trying to visualize where they all fit. And so, again, these are the different fund balance, the different funds we have, and the changes that you'll see there. A review of income statements. This is our statement on our, taking a look at our revenues versus expenditures and arriving at a net balance. So the statement of revenues, expenditures, and changes in those fund balance. The scope of the audit covers all of our funds and our activities for the county. It also includes different funds and such that we might have out with partnerships, say like our local housing and CDBG grants that we have stationed with other folks, but we still have obligations to account for and to audit. It accounts for a general fund. This is it's an audit report versus an administrative report. So this is a third party coming in to assess our finances and check and balance. Kind of going through here in a basic type of an accountant layout, you're seeing your revenues, less your expenditures, and then factoring in your different other financial sources and transfers that you may have out there arrives you at a net position, if you will. So the overall fund balance and the position of the county, like we talked about at the end of the day when the dust settles and you end your snapshot on December 31st, entering into 2021, we were at about $8,281,201. And then at the end of that year, at the end of last year, at the beginning of this year, at the snapshot, we were $8,225,133, or the difference of the net position dropped for the county in liquid types of seen funds of $56,068. So significant findings that we saw from the audit, again, in 2021, some of our material weaknesses was segregation of duties in payroll. Due to our limited staff, we do run payroll mostly through Tammy Hendrickson, our payroll and benefits specialist. We do have some separation on the transfers of the actual electronic transfers that get sent out to the bank, but the auditors would still like to have us have more separation of some of those duties. Again, our challenge is just becoming how many folks that we have available to touch those. Material audit adjustments was also another one on there, in ensuring that when we're doing fund transfers and such, that we have it all locked down to manage and move those funds appropriately to have them reflect the actual services that are being performed. Significant deficiencies, we had none, which is good. And then we had management letter comments. We had our CDBG housing loan oversight. And again, that's one of those that we have out with our housing authority. They'd like to see us have more oversight on that. There's a GSB statement number 87 implementation, some standards in there that they'd like to see us improve on, as well as departmental cash oversight and reconciliation. They had further comments for us to continue to refine to help add more of that security and that control of our finances. And so that's kind of the perspective from your auditor on your performance of your budgets and the auditing report from 2021. Now we do have the 2022 audit is in its more final stages. I believe in the first part of August, we're expecting that to come back to you. And that would then capture our performances from 2021 audit that we would receive here in the summer of 2022. Mr. Chair, how are we doing? Do you want to go forward into our 2022 review on our annual operations budget and capital improvements, or do you want to take we've got quite a bit left. The next section here, I'm guessing, is going to be at least an hour. Going forward? Okay. Sounds good. And since you're the boss of me, you can also decide at any point of, we'll hit the lights and we can take a break as you need. So we've talked about kind of the performances of what we look like from an auditor's perspective and how our accounts are flowing. We've talked on the perspective of our borrowing, our municipal advisor, and what we look like to folks at Moody's who are assessing our borrowing capacity, and to buyers that might buy our notes and such. And Jeff has given us a perspective then on this is our cash in hand and where we keep our cash in hand, and how potentially in the future we can invest those funds to get a little bit more of an interest income on those monies that we have. Now we're going to transition and kind of recapture some of the elements of the 2022 budget. And this is a very important because in building the project of trending out what the future looks like for 2023 out to 2027, it's all based on the premise of what we did with the 2022 budget. So when we hit the worksheet, it's kind of, keep these premises in mind, because that's how we're trying to account for, again, the trends moving forward. So the 2022 annual operations budget, some of the budget objectives was that Richland County Administrator and Finance and Personnel Committee are committed to a county-wide 2022 budget that will meet the following objectives. We addressed the levy. We wanted to meet our operating levy limit as imposed by the state of Wisconsin, which we did. Services, we wanted to operate within operating levy limit. We wanted to protect effective delivery of essential services, and to the greatest extent possible, maintain current discretionary services provided directly by the county and or through partnerships. We responded to the COVID-19 impact in utilizing the American Rescue Plan in accordance with federal guidance to best suit the needs of the county. Capital improvements and capital outlays within the operating levy limit maintain the county's infrastructure to ensure that future boards do not have to react to aging and broken systems, causing frequent sharp rises in property tax levy and rate. Continue annual short-term loan financing for capital improvements and capital outlay programs that identifies and prioritizes projects and equipment over $5,000. And preservation of undesignated general fund. We wanted to strive to build and maintain an appropriate minimum undesignated general fund balance of 25% of the annual general fund operating budget. And this kind of fits in with GAAP guidance of every county and municipality is recommended to have that 25% buffer. So if some unforeseen expenditure hits your way, you can respond to it without having to go to a note type of a bonding type of a thing or borrowing to make it work. And you can't say that for all municipalities. If you're a large city and you have excessive revenues, perhaps coming through service fees and things of that nature, you could possibly operate with a less than 25% and still be okay. But for our smaller operation here at a $36 million, 25% is most appropriate. Wages and benefits, we wanted to meet projected increases and adjustments to health insurance premium costs and fringe benefits. And then finally, we wanted to make incremental adjustments in employee wages to progress towards the goal of obtaining market value as determined through the 2018 study, resolution number 1989, which is your Carlson-Duttman study. So in preparation of the budget, those were the goals we'd set out to do. The process and preliminary guidance. So the process that we engaged in to set the 2022 budget, which is this year's budget, the operation budgets planning and preparation was completed in multiple phases. First, we had appropriations request guidance that we put out. We issued out a letter that explained to the departments what our different goals were with the budget, and then gave them guidance on how to submit their worksheets to, I think for most everybody, it was at a 0% increase, but still factoring in wages and benefits to employees. We then had departments' preliminary budgets that they submitted back. We conducted departmental hearings. The administrator made a review and recommendations, and then Finance and Personnel Committee reviewed and made recommendations, and then finally was submitted to the county. And then we finally had submission then by the county administrator to the county board. Departments and partners were instructed to draft preliminary budgets with a 0% levy, 0% increase of levy use from salaries, wages, contracts, operations without consideration for capital outlays, and to incorporate those into our short-term borrowing for capital outlays. When we received this information back then of imposing out to departments on come back with plans of 0% levy increase underneath those conditions, we still remained at about a $464,215 gap. Some of that being accounted for because we had our health insurance informations came back and our premium costs increased due to pandemic and our loss ratios and some other types of factors. So we had to maneuver in an extra $464,000 type dollars to fill. Overall, the budget looked like this. This was the cover sheet that came to the county board for adoption. And again, you can kind of see some of the numbers here that we looked at earlier. Well, no, you can't. It's really super tiny. So our total expenditures, again, was that $36 million amount. And it kind of shows here where those expenditures are coming on, broken down by general government versus public safety, health and social services, et cetera. That pie we looked at earlier. Then we lessen all the revenues, and then we arrived at our $10,447,000 our levy that then was imposed on our tax base. If you're looking for additional references on kind of understanding then the different departments, the services that they provide and their goals for their departments, we have a link on this slide here that kind of takes you out to reference that meeting in which these materials were covered. And it'll give you a little bit deeper dive then into what each individual department kind of does and how those funds are spent. In there as well, you'll also see the full worksheet that complements this cover sheet, and it breaks it down then by each type of services and departments, a little bit deeper look into those expenditures and revenue lines. The 2022 annual operation budget, so the impacts of the 2022 budget that was adopted. These were some of the premises, again, that's important to keep in mind as we carry forward into the next trending type of exercise. The 2022 budget objectives were met with the utilization of fund balance from Pine Valley reserves of $504,996. And then we had contingency reserves that we used from the county of $300,000 and undesignated general fund balance of $88,000. And we also continued to use our short-term financing and capital improvements of $1,050,000. So these fund balances and this borrowing mechanism is what was put into place to help plug the gap that we had from operational expenses and from our borrowing, our capital improvements, in order to make our current budget this year work. The 2022 budget included the addition of roughly 2.1 full-time equivalent positions. The budget accounts for a continuation of assistant to the administrator position, an added position to the district attorney office in response to mandates from Marcy's Law, an added casual position to MIS to support the many virtual meetings that were used to conduct public business. The 2022 budget absorbed 16% increase in health insurance premiums. The increases are a result of the group's usage as well as the increased cost of medical care. The 2022 budget allocates additional funds of nearly $1.5 million to adult and child institutional placements to reflect the recent trend in increases needed to adequately cover those expenses. Prior to this budget, historically, we've kind of underfunded those two budgets for the child placements and for the adult placements. And we've kind of relied then on Health and Human Services, hopefully underspending their, what they see as their core budget and using those added funds to make up the difference in the child institute placements. So this, moving forward into this year's budget, we tried to stop that practice and fund those placement costs to the actual projected amount. In 2022, budget resulted in a slight decrease in the millage rate to property tax owners. So we did have a slight reduction in the disbursement of meeting that levy. Okay, so keep those things in mind. A big one out of here again is to make our budget for this year work. It was based on using $500,000 in change from Pine Valley funds that they have available, or that they make in revenues, and that originally were kind of the idea set that would go against debt service fund to pay off of our Pine Valley debt service sooner. We also used contingencies funds from the county of $300,000 and $88,000 to make the entire project work. And so now we'll begin kind of taking a look. We're still good to go, Mr. Chair? We're still good? Okay. So this is kind of now going to be the big kind of worksheet that kind of tries to frame all these different moving pieces. So We have the 2022-2027 financial planning decision worksheet recommendations, and this document is intended to track projected revenues and expenditure changes to allow for planned and strategical annual budget process in prioritizing county services, staffing, and operations. This document may capture some capital projects proposed for operational levy. This document's assumptions are built off the balanced 2022 budget, accounting for the use of fund balances and one-time revenues. And it impacts that created an additional burden to our tax base are indicated with a positive number, and impacts that reduce burden to the levy are indicated with a negative number. So as we work through this worksheet, there's going to be many columns, and it's very busy, and I do apologize. But every time you're seeing a positive number, you have to visualize that as an added burden. That's adding beyond 2022, that's adding more gap that we have to fill with some type of revenue source. If you see it as a negative number or in the parentheses, that's a reduction. That means that's less levy impact that we're anticipating. Section 1 is built on the premise of reaching market value compensation goals as established through the strategic plan and COLA increases desired through finance and personnel. So, when we get into the document, you hear the first section is based on the presumptions of our finance and wages. So let me kind of take a break from this document. I'm going to pull open then what you'll see, supervisors, in your folder, or if you're on the website and are following along. This is going to be the document number, document number 07A, Financial Planning Decision Worksheet Recommendations. And let me see if I can try to get that on WebEx looking slightly reasonable. I think it's still going to be terribly small. It's about as big as I'm going to be able to get it, which is going to be small for everybody here. If you have to move up, by all means. Otherwise, I'll try to read off each one so you can understand kind of what it's saying. Go ahead, sir. Yes, it is. You can find it off of the county's website, off the drop banner underneath county, finance and personnel. You'll see it in the agenda packet. It's broken down into PDF. This one is underneath item 07A. It is also for county board supervisors in your committee folders underneath the reorg finance and personnel 2022.
Is the title of this 2023-27 financial planning decision worksheet?
Yes, that is correct. Is that Supervisor Seep?
Yes.
Yes, you're looking at the right document. It's a very, very busy and long worksheet, Excel worksheet.
Okay.
Okay.
See it well on my magnifier.
Okay, so we're going to plow into this. Mr. Chair, you can let me know if we need to take a break, but kind of starting from the top now, this worksheet is broken into 7 major sections. First section, we're looking at forecasted expenditure assumptions and commitments at an organizational type of a level here. So the first assumptions that we're putting into place is we're looking at proposing wages and compensation increases for our employees. And it's based kind of on 2 different factors of trying to get folks on our Carlson-Detman study schedule, and then also trying to incorporate cost of living increases significantly impacted in the next few years from our inflationary factors. So we're looking for 2023 for Pine Valley of a step increase on the Carlson study plus a 5% CPI increase. In 2024, we're looking at another step increase to get them to the market value, and then also another 5% increase. 2025, a 4% CPI increase. 2026, a 3% CPI increase. And then 2027, another 3% CPI increase, and that's a consumer price index. That number is kind of used through the Wisconsin Employee Relation Commission that they take from the Department of Revenue, that is kind of the baseline for public employees that are still unionized and working under a base wage bargaining, reflect that same type of a number. And again, that's kind of a cost of living estimate. So these numbers were pushed out to Director Rislow. We said, these are our anticipated costs increased. How much of this is going to impact directly towards levy? Tom and Therese took a look at it, came back and said, well, they can absorb all of these types of funds that they would not impact levy. Now, though, that does have to account, though, for that money has to come from somewhere. So bottom line, return on monies that you can expect then from Pine Valley to come to you in operational discretions have to be kind of considered. And we do that later on in the worksheet. But when we look at Pine Valley, as far as it directly impacts the levy, we're not seeing any type of direct levy impact. Highway, we did the same thing towards Josh and said, what is your impacts if we do these types of increases? Now with highway in general, our general employees, it's a little bit different. Is Pine Valley is already two steps ahead of general employees on the Carlson-Detman scale. The proposal for general employees and for highway is to do two-step increases moving forward into 2023, plus a 5% CPI. 2024 then is still one increase plus CPI. That was 2024. 2025 then becomes the final step plus CPI, and then 26 and 27 are just CPI increases. Josh figured with their revenues and reimbursements that they're able to get back through the state, and provided that the county still engages in $500,000 of short-term notes to go towards trunk infrastructure projects, that the highway department would not see a additional impact on levy to absorb those added expenditures. Story is a little bit different now for your general employees outside of Pine Valley and for highway. And the reason those two kind of are in their own separate realm is because they operate financially on their own proprietary type of fund in their own finance services. So that's kind of why they're separate from the rest of our employees. We enter into section line C1 of section 1. We have the same question then for our general employees. And then the story comes back much differently. We're looking at then for the same types of increases for highway of $1 million for 2023. For 2024, we're at $880,000 and change. 2025, we're at $829,000. 2026, again, now we've reached our market value for the Carlson study. 2026 and 2027, we're at $547,000 and then $524,000 of direct levy impact in order to try to meet those goals of getting folks to market value, plus also then trying to gauge for inflationary factors and cost of living increases. In talking with Health and Human Services, we said how much of this potentially could be absorbed through any additional remaining revenues and reimbursements, and there's not anticipation that there's going to be much absorption left through Health and Human Services, and that those would be levy impacts as well. Consideration for your dental plan, which is in purple, which is now black text on purple in terrifically small font that I can't imagine anybody can see here, but your dental plan, there would be no increases. Your dental plan is arranged in such a way where there is a set dollar amount that the county contributes towards that dental plan. Through Delta Dental, historically over the last few years, we have not seen any premium increases, which has been good. And even if there is going forward into the next year, we're not anticipating that hitting county levy because that added expense would be bore by the burden of the employee if there are increases. We then also factored in increases of liability insurance, of property insurance, and vehicle and equipment insurance. Together, looking across our trends, we've anticipated that those insurance liabilities for those coverages are going to be an increase of $18,000 and change, $20,000, $18,000 again, $25,000, and $28,000 moving forward. Okay. So now we take a look at our section 2, which is forecasting some of our revenues and our assumptions that we're thinking might happen for revenue flows. Line number AA in section 2, we're expecting that the Lone Rock Energy Farm, the solar field there, is coming online yet prior to the beginning of next year. So if that holds true, we're anticipating then a revenue flow for each of the years for 2023 out through 2027 in the form of energy credits of an added $116,667. And you'll see that this is a bracketed type of a number. So this indicates this is a fill for us. This is an added revenue. It's a great thing. And it's going to help us try to make up the difference on many of our other expenditures, which is making our gap wider. We have TID districts ending. We have the one that we know about here in Richland Center, as Carol pointed out, and which may need to be factored in as well as the one in Viola. Now, keep in mind when a TID district expires, it's just that incremental district, and that incremental district and that difference is going to have to be kind of split into three, as a third of it comes to the county, a third of it likely stays with Viola or Richland Center, and a third of it is probably going off to a school district. So those numbers should come into us as a fill, an added revenue increase. But the likelihood is it's probably going to be about in the thousands of dollars type of a range. Undesignated general fund balance. Last year, as we talked about, we used $880,285.08 to fill for this year, and that was out of fund balance. So in order to move forward into 2023 and beyond, we've got to make up that difference. So we've got $88,000 gap for each of our years going forward that we're going to have to make up for, as well then as our contingency fund balance that we opted to use for this year to make this year's budget work. That's another $300,000 gap. Last year, we went heavy into Pine Valley at $504,996 of using returned revenues from Pine Valley to offset our expenditures and make our budget year this year work. Anticipating moving forward into the following years at a reduced amount and back down to kind of what we had done the year prior of $300,000, which then makes though a $205,000 additional gap yet that we're going to have to figure out how to fill. Increased levy limit from net new construction or allowable minimum percentage. We're kind of estimating that with our net new construction trends, maybe that increase is about 20,000, 25, 30, 35, and then 40 into 2027, possibly. If we do have some folks that come into town and start building some very big structures or developments, that increases. But again, it's all based on a formula on net new construction, not just equalized value. So while our property values are increasing, unless we have new people building, we're not allowed to raise our operational levy limits. Okay? So overall, though, when we start looking about, well, what does that mean? That means that we haven't added $456,000 now of revenue shortages that we have to make up for going forward into the next year to account for those fund balance changes, with a little bit of that absorbed into our energy field and also from our increase in net new construction. So overall then, section 3 is our estimated gap. So even before we start talking about different changes at a departmental level with operations, our gap is looking like $1,512,456.63 entering into 2023. And then for the next years out, it's 1.3, 1.3, 1, and then 989,000. And that's to, again, meet our goals that we had established of reaching our market value on our wage schedule, of incorporating CPI increases, and then trying to figure out how to fill for fund balance that we had used this year. We're doing okay, Mr. Chair?
Comment about why is this necessary?
Sure, our conversation points. So right now you can go out to our website underneath our job opportunities that we have with the county, and we have many postings available. We're struggling with recruitment and retention. I will say that Richland County is not alone on that. Both private and other public entities are also struggling with recruitment and retention. But we know that it's significantly impacting some of our services. We've seen retention on some of our positions, even up at our office here. We've had property lister come and go. We're at our third or fourth person in our account supervisor, or I guess our third person in account supervisor in the last few years. It's been a lot of transition. Health and Human Services has frequently come in. Tom has had trouble in the back with trying to make staffing levels to meet our census levels, to bring in revenues. Highway, Sheriff's Department, had a lot of recruitment and retention type of issues. So we know the time is kind of past on meeting our, try to fix what we have out there on hand, but at the same time, we know moving forward that we've got to at least be doing our best to meet a market value for a study that we did in 2018, plus keeping up so that we don't have employees having a reduced consumption power and not having a CPI reflected. Did that answer kind of what you're trying to get at?
I've been doing a good job keeping up with.
Yes, yep. Yes, that is a fair statement. Okay, so now let's move into section 4. Now, section 4 does two parts for us today. It is a list that, in working with the departments, we had identified different changes in their needs. Most of them are increases for needs and desires to fulfill and to make services continue. There are some reductions in here. And then you're also going to see notes then of the administrator's recommendations moving forward. So beginning with Health and Human Services, the first item that you'll see on here, item 1.01, is an upgrade replacement for their electronic health record system. This was initially, I believe, put in as a 2024 item. It is my recommendation that we push that out to a 2025. Implementation cost is $100,000 and then $10,000 a year seen thereafter for licensing and continued contracts with that. There is a proposal to have the custodian position switch to a full-time employee at an estimated reduction of $6,000. Other items that you see on here include compensatory on-call, recruitment and retention incentives, which have yet to be determined, reclassification of master's levels for their mental health therapists, reclassification of mental health counselors, reclassification of APS workers, reclassification of APS crisis workers, reclassification of CYF managers, and reclassification of CYF youth and aid workers. Again, with the extensive trouble that they've had with recruitment and retention, these are in here currently and left in here. We'll see a reduction proposed in here of reduction to our adult and child placements of $100,000 based on our increase going forward into this last year of meeting an anticipated $1,485,000. It's believed with the current folks that the department is seeing that we potentially could reduce funding into that placement funds of $100,000 at least for the first year, and then necking that down into $75,000, $50,000, $25,000, and then being even out in 2027. Now, that also has to account for the fact that that's a risk type of a fund. You don't know when another placement need is going to arrive. And those funds, though, also are, they're non-lapsing. So if there's an overage balance in there going forward into the next year, hopefully that carries over into the following years to help absorb that. As we move then into the next page here, the Health and Human Services Strategic Plan, there's notes on here of what it would take for them to consider a 20% levy expenditure decrease. And then we also have then a directed reduction of $50,000, what that would look like. I don't have that plugged in as a recommendation to consider into cost today. And then we also have on here an issue or an item from last year from 2022 going forward into this one. We incorporated an alcohol and drug treatment court. If we wanted to pull that out of the budget, it's about a $27,000 savings. So overall, the recommendation for a Health and Human Services budget as of right now with the reduction into the placement costs puts the overall budget at a $75,000 reduction to the levy. Highway Department, last night we had Commissioner Elder, he was in here, and we moved forward with a combination of combining and eliminating some of the positions that he has. He's looking to reclassify shop foreman to a part superintendent, but then also eliminating the part clerk, eliminating the parts clerk position and a mechanic position, and then increasing his staff office or his office staff from 35 to 40 to kind of cover then on some of those items that the parts clerk would be doing. And then he's also looking at potentially to have an equipment sale. Overall, the Highway Department then moving forward into 2024 is anticipating to be operating with a minus $64,000 levy for those types of expenses. And when I say that, I mean, that's not accounting for, keep in mind, our increases that we're already factoring into the top for wages and for benefits. These are added expenses that the departments are looking at beyond those types of assumptions. So for the for the sheriff's office, a petition for quite a few different increases here that they're projecting, that they're seeing in trends. First petition is to add a jail administrator position. We also had a reclassification of their clerical position. An 818 position for 2024 is considered. Gas expenses and increases, ammunition increases, increases in training expenses, computer maintenance increases, internet costs, SRT equipment, drug task force supply and equipment, lights, light bill, telephone bill, heat, and then increases in jail supplies, etc. Overall reduction, if they were going to enter into a strategic plan kind of a thing on what it looks like for an increase of their 20% levy expenditure, you're looking at $695,524. Not recommended at this time. What is recommended, and it's on here for the finance and personnel to consider yet, is a reduction of one daytime patrol during the weekdays at an estimated increase of reduction of $78,000. So overall, the factors as put on here, presented and recommended to you, with the stricken added jail and the reducing a daytime patrol, but then considering adding in an 818 position, comes to you at a reduction of $43,000. And going forward then into the following years, reduction of 17, but then we start hitting an increase of 13,000, 44,000, and 79,000. So even though maybe we're solving our financial problems on the short end, we still have to account though for these expenses that are creeping out. Tower radio project, our 911 project. We have our resolution that we did last night to enter in with GenCom now as our primary contractor to begin the engineering aspect of it and what that system is going to look like. We currently don't know what a maintenance cost and what tower rentals and all those types of things are going to factor in and what those expenses are going to be added. So we're estimating right now, potentially in 2024, that could be an added $100,000 in rental and upkeep and maintenance and all those types of deals, and adding 3% thereon. We do know for our 911 system, though, that we have a software refresh in 2025 of $200,000. This is an item right now that's fit into operations. It could potentially be displaced and put into our short-term loan type of mechanism, our capital improvements program. That would require maneuvering on that element, and we'll get to our capital improvements project later on down the road here. So we're also factoring in considering our contracted support for GIS and for the ESRI system. In order to make our Spillman system work, we have to get our mappings updated and configured. So we're looking at a $10,000 potential contract to help bolster our GIS capabilities to get those in place and then help with continued maintenance. What is stricken from here is the goal potentially of having a separate dispatch center from the jail. In staffing 8 dispatchers, it was estimated to be about $523,000 impact. I think it's still a really good idea that we would do that, to have our jailers and dispatchers working in 2 different realms and possibly eventually 2 different spaces. But trying to fit it in financially in the next 5 years does not seem like it's a feasibility. The numbers are left on here. Of course, if finance and personnel thinks that they have a difference in opinion, the numbers are put on here and we can slide and arrange those to try to put those back into place to display something else. Central Squares, which is another software type of a function for 911, is also put on here, and we have to do an update on that in 2025. Another placeholder that is on here is consideration for tower rental revenues. We're anticipating that we may have 1 or 2 green sites in which the county is going to be building its own potential towers for the emergency management system. With those sites, we would potentially have vertical, what they call vertical real estate, where we could be renting that space out to other folks and have some types of generated revenues. Generator maintenance contract is something that's been discussed. It has not been cost. Another different expense that we have to understand though too is if we do have our own green sites and we're operating on different rented tower space, we're going to have to factor in if we've got additional fiber use costs to also put into there. Overall though, the tower project, anticipating the first year maybe in 2023 and it added $10,000 expense, but then when we hit 2024, anticipating it to creep up to $100,000. We factor in the software refresh in 2025, we're at $332,000, and then settling back down to about $100,000 expense projected moving forward. Clerk of court costs, we have a reclassification of a deputy to a chief deputy type of a position, and then also looking to increase some fundings for mental health evaluations as they're becoming more frequent. Anticipated increase in costs then moving forward for the next years would be ranging from $6,000 and creeping up to $14,000 in operational expense. You doing okay, Mr. Chair? We're at 12 o'clock. You want me to keep pushing? Oh, there's a lot. I'll be talking at you for probably at least another 2 hours. Okay, we'll go to 12:30. You can throw a shoe at me if we need to stop. Okay, Marty's sandwich is ready at 12:30. We'll try it out. Okay, county clerk budget now. We're entering into having the Muni code with our self-publishing and codification software, and that's funds that I think we initially used with ARPA to get that in place, but this is going to allow for our ordinances to be out there codified and on the website accessible. We also have petition here for recorded digitization and software, and this is also then to kind of complement that to start getting our resolutions out there. So not only will we hopefully have ordinances codified, searchable, accessible, but doing the same thing then with our resolutions. There's also consideration in here though for a reduction in expenses, and that's to begin charging townships for election services. And this is charges for services individually for each election or for a flat service fee. This is not something that is unique. Other counties operate with this, but it is going to be a displaced expense or it's going to be added labor to a township, as right now Derek's office does perform a lot of the election functions that are imposed, and it should be a duty of a township. But that could come to us as a $50,000 reduction or a revenue. So if we impose that, and it's recommended that we do, we're looking at a $30,000 or $37,000 overall reduction to the county clerk office. Child support, looking to increase their staff. We took them from a 3.1 type of an operation down to a 2 FT position last year, the year before. They're struggling with keeping up with a lot of their different supports and keeping their case claims. Initially had petitioned for a 20-hour, a part-time week, already going forward into 2023. I have made the recommendation to push that 2 years to the right to 2025. They do have estimated increase in other operational funds, including staples and pencils and contract expenses, et cetera, of $4,000. Coroner's office, I have no recommendations on change for that. For the family court commissioner, I'm recommending that Deb get an increase of 3% in her wages and compensations. I think it's been the better part of 5 years or so since we've increased our wages and salaries for court commissioner. And then she's also anticipating some added expenses for dues and for travels, totaling to a $1,000 increase, essentially reaching up to $1,200 by 2027. District Attorney's Office, no recommendation or foreseen changes. Now do keep in mind though, we did add what is a victim witness supervisor position for this year's budget. I believe that position is posted right now. The idea was to kind of wait until mid-year to help reduce some budget aspects and give us a little bit more funds going forward. But that position was just recently added with this year's budget. Register and probate is looking to do a little bit of increase on some of their anticipated costs with attorney fees, and trying to project that out. We've added a 10% increase then for each year they're out, and trying to project and forecast that. Register and deeds, no anticipated changes at this time, and not making any recommendations for reduction. Treasurer's Office, looking to, there's going to be some conversion and increased licensing for cloud-based tax software with LandNav. And this was brought to Jeff's attention, I believe, at his last conference. It's going to be kind of an imposed thing on thou shalt do this, and it's not really, unfortunately, an option is how it's described to me. But this is going to be an added increase in software expenses of $23,000 for 2023, and then continued operation, licensing, and maintenance of approximately $6,000 going forward into the future. Property Lister, looking for their GCS software increase of $3,000, but looking to actually incorporate this into the Treasurer's Department or the Treasurer's expenses. So there potentially is an increase again of the software up here, which should hopefully then also though take care of our increases to our GCS software increases.
Mr. Chair, this is Sean. I'm wondering if it's okay if I interrupt with a question.
Yes, please go ahead.
Okay, so Mr. Langreich, I'm wondering, you talked earlier about how the wage increases, are going to be there in future years. We'll have step increases and then the cost of living increases. So I think I'm missing something here. So wouldn't we be seeing an increase to, say, the Register of Deeds or the Treasurer's Office or the Register and Probate for those on this spreadsheet? Wouldn't you be recommending those, or are those somewhere else in the spreadsheet?
A good observation, Supervisor Murphy Lopez. We accounted for those changes up in section 1. So we generalized and went across the organization on our projections and our assumptions based on our payroll data. So let me make sure I got my marker here. We're on line 12, like 13. So up here in section 1 is where we're accounting for increased wages, compensations, FICAs, WRSs, and healthcare, health insurance increases are all attributed and calculated up in section 1 of the document. Does that answer your question?
So where would I see those 3 departments that I just mentioned? Which line would those be in?
Section C, wouldn't it be?
The departments that we just went through and like with the Treasurer's Office would be included into the general projecting wage increases in section C 1 through C8.
Okay, thank you. That answers my question.
Nope. It's a good question. So yes, now you are going to see though, like an example, and to not make it confusing on here. So like we just went through though, we'll have, if it's like a reclassification or you're eliminating a position, something that's not accounted for in section 1 will show up down here in section 4 with the different department elements. So like you'll see in district attorneys, the district attorneys here on line 10.90, we have on here the witness, the victim witness supervisor position. So that's on here as an indicator that if there's reason to think that we're going to take that out to free up capital, it's still listed on here with an identified amount as a lever and an opportunity for decision makers to action on that. You'll see that also with like the administrator section has got my position, Cheryl's position on there as well with associated numbers, because those are actions that are not being accounted for in section 1. Okay. So moving then on, property lister, land conservation. So there's a increased projection that the Mill Creek inspections will have to now begin hiring an engineer to complete the DNR requested inspections for dams, I believe, and that starts in 2024, which is going to be an added expense of $12,000, $6,000, and then $12,000, and then I think we get a couple years off, and then it rotates again. We do have on here the reduction in rent. It's anticipated that land conservation is going to be joining the zoning office in September or shortly thereafter in the current existing ambulance and emergency management space. So we will have a reduction of $11,000 in rent that is recommended. And overall then, though, you're seeing the other recommendation that's also put in here is in 2024, the consideration then of reducing zoning and land conservation in together by 1 full-time equivalent. They operate with two administrative assistant positions now. It's not just administrative assistants. Both of them have added hats onto them, whether it's helping with parks operations or sanitarian types of operations. But at assessing and then moving forward in 2024 with reducing those two departments in total by one full-time equivalent. And then zoning department is below that. And that's kind of tied into the line 15.92 land conservation. You will see on here though, added gap from a reduction in the use of the land information grant. Historically, the county is kind of over-imposed on that land information grant. It is kind of specific to GIS and land informations, and we kind of went down the hole of imposing zoning administrator salaries and sanitarian salaries all against that grant, which is outside of compliance. So removing another $30,000 of use against that grant and salaries puts us in better grant compliance moving forward. The recommendation is also on here then for Veterans Service Office to reduce not filling the current vacant part-time position. That's a $23,000 gap fill that is in place. It is going to create a reduction in quality and accessibility of services. The best solution I can offer to that is if we need to have then more administrative type of support and reception type of support, then would be to move the CVSO office into Health and Human Services, where clientele could access then the front desk for scheduling, for reception, and for potentially for small fixes. Courthouse maintenance, we have an added door contract for door maintenance on the accessibility of the doors. Energy audit is not recommended this time, or the air renovation and mold mitigation is not recommended at this time. As part of our strategic plan, we do have on there to make a combined maintenance type of department. The only way that I would see that work is to have an added maintenance type of an engineer position that would be imposed. That comes to the tune of about $82,000 starting in 2023 and then inflating outwards. I've cut that out in recommendation from 23 to 2026 and made it as a recommendational item for 2027. I figure the other aspect that is going to have to be kind of go into place is with the other recommendations, you're going to see different considerations for, does the county want to continue with these types of buildings? So by 2027, the county's footprint on what buildings that you own and what buildings you want to consider to have a unified maintenance is hopefully a better picture for you folks. So overall, the added impact that we're anticipating operationally from the courthouse is $25,000, but then you'll see a lot of courthouse maintenance pieces coming in through the capital improvement plan.
Mr. Chairman? Yes, Mr. Chairman. Mr. Langrick.
Go ahead, Supervisor Steve. Chairman Brewer can hear you.
Yes. My question is, how does the current advertisement for a position, part-time position at the Veterans Service Office relate to this proposal?
The position is currently posted. It's currently funded. This is a recommendation that's going to be going to Finance and Personnel. If action is moved on it and it's moved on and adopted as the plan going forward through July, then we would cease and desist on filling that position.
Thank you.
MIS. So MIS, we're looking for a reclassification of the existing MIS administrator position. It's anticipated that a lot of the added radio tower elements from the new project are going to be falling onto that in conjunction with the ever-growing needs and demands on that department. The petition for a actual dedicated sheriff tech and radio tower coordinator position has been pushed out and potentially postponed out until 2024. A reclassification of the MIS director position has been pushed out to 2024. Now, we also now have Gabe right now is our MIS assistant position. He was added in to kind of help with our growing needs for tech support as we conduct our live meetings, as we operate with more remote devices, and we have more and more growing demands of MIS. Through this proposal here today, it is proposed that that position be retained by the county as a contractor position for 2023 and 2024, with consideration of making it a part-time 20-hour employee following in 2025 and there beyond. County tech. So county tech is a little bit different from MIS. Think of MIS budget as your budget for the actual MIS as their end users. Moving forward into the 2023 budget year, we're looking to use a different fund to start capturing all of our county technology expenses. And these are expenses that have organizational impact. First one on here is Office 365 licensing, which is much need, but is also very much expensive. It's my recommendation that we push that from a 2023 to a 2026, which is continues on some of our complications that we have with sharing different types of documents, of encrypted emails and some of those natures. We still have to be still operating with a lot of different patches, but it is an expensive undertaking. Added expenses, though, that we have to keep up with, and these are added expenses that have crept up on us in the last few years. We went AS400 cloud-based backup rather than using internal tapes. We have to account for that. Our Smarsh mobile devices, this is our archiving to help us maintain compliance with open records. We're looking to incorporate those expenses moving forward, as well as JAMP, which is our management and our updates. That's how we can push and impose updates onto our mobile devices. Telephone licensing, we're looking to increase about 7% each year. The new website would be nice and would be great, but again, it is expensive and is recommended to push that out until 2026. Veeam is our server management. That is how helps us track and then also image all the different pieces that get put into our dynamic server storage system. That comes as an added expense of $250. Miscellaneous software and expenses we're incorporating in here of $25,000 and then creeping up at a 5% increase. This would allow then for different Adobe licensing, Genome licensing, WebEx licensing, etc. Antivirus, we went forward with an extended contract. I think it was a buy three for the price of two type of a deal. So we should be good on that through 2025, but then that expense is going to hit our books. Our Barracuda web filter, email archiver, and email encryption. Again, those expenses are added to help us with our security types of elements, and those are additional expenses. We also think it's important for security training and testing to help mitigate any types of phishing scams that could hit us with a data breach or any type of malicious ransom type of ware types of element. Security cameras and video storage, added expense of $500,000, and of course, creeping up. And then secondary internet redundancy is also a petition that's on here. And this is adding a second line so that if we had a failure from our primary, we wouldn't be left dead in the water. We would still have a small bandwidth pipe that we could be pushing out essential information for essential services. And then there's also the petition on here of adding iPads for citizen members on our standing committees. Our reconfiguration to standing committees has brought a lot of folks into our standing committees that are not assigned as county board supervisors. Thought it would be appropriate to make sure that they have the same type of devices and have access to those county committee folders and emails for the sake of being able to have information and making their decisions, and then also to have email archive availability. So if there's any types of open record requests, it's hitting a county organization email and exchange versus their own private email. County tech, so total expenses and added is looking like 46,000, 44,000, 65,000, 173,000. And again, that's because of deferred expenses on looking at doing a website down the line, looking to doing Microsoft Office 365, and then those expenses continuing on. Administration. So we have a lot of different goals with administration that have been talked about through strategic planning or through rules and strategic planning, as well as some elements that were talked about through finance and personnel. Two of the goals is to have the creation of a finance department and to have the creation of an HR department. Again, these are seen as added full-time equivalent positions. It's recommended with the budgets being this way to consider those out into a 2027 type of a financial plan. Now, at the same time, in order to perhaps try to bridge that, the county could consider the creation of an HR and finance department combined effort with a single coordinator that is templated on here to be considered in 2025. So essentially, you would have a combined finance officer and a HR coordinator position for 3 years, and then consider, based on the assessing that position, if you want to continue branching then into having a segregated finance department and human resources department. The next items that you'll see under here underneath 2103 is consideration for staff training and professional development, looking to do additional funds for staffing to encourage more experiences through Wisconsin's Association of County Personnel Directors, and then also through Wisconsin Government Finance Officers Associations, and getting folks more involved with that so we can learn about compliance issues and recent market trends and practices. There's also a petition on here then to have more funds available for department head training, targeting on leadership. This is kind of pushed out to a 2025 expense. There's a proposal on here as well, and it meets our strategic plan of having a new ERP system. We just invested last year into a new AS400 system, $60,000 investment. If we're looking to transition away from the AS400 system into a web-based system, kind of one of the most popular ones that counties are transitioning to right now is through Tyler Technology. It's a Munis system. It's all cloud-based. You're looking at implementation of at least $300,000 on the front end. If you're looking to also do the different portals of employee service support and recruitment and retention, that number can quickly grow depending on what types of wraparound softwares that you're looking to include with it. Additional administrative expenses is looking for year 2026 to begin instituting a lapsing Fund 10 contingency fund. We still do have a small amount of fund available in Fund 11, which is our current operating contingency fund. But if we reduce any types of contributions into that fund, it's anticipated that maybe it lasts out through 2027 conservatively. And at that point, we get away from having a non-lapsing contingency fund to going to a lapsing fund where you're dedicating $100,000 annually for contingency expenses. Mr. Chair, you're at 12:27. Your sandwich is going to be ready at 3 minutes. Do you want to take a break here?
Good place for a break, I would say.
Okay.
So we will break for,
How big a sandwich is it?
1:15. Let's be back here at 1:15.
1:15. All right.
45 minutes.
Okay, everybody out in Radio Land, if you didn't hear that, at 1:15, we're going to come back and reopen the meeting and continue on with county board expenses.
I see. I'll be waiting for my sandwich.
Those of you who stuck with us and returned, thank you.
Thanks for the sandwich.
And for your information, Princess Gigi was just fine, but waiting for me at the door with her leash and her mouse, so. Okay. Let's, Mr. Langrick, if you will, please.
Okay, we'll get recalibrated here. Can you folks out there on WebEx, can you hear me? Anyone?
I can hear you, but I didn't get my sandwich.
Okay, thank you for Supervisor Seaman. I'm sorry about the sandwich. Okay, we left off with taking a look at the different adjustments, proposals, needs and wants and desires with the administration budget. So with the items that are on there proposed, you're looking at a $3,500 increase for 2023, to a $108,000 increase for 2024, $103,000 in 2025, up to a $200,000 increase in 2026. And then if we're moving forward with considerations on a new ERP system, we're at $583,000 going forward into 2027. Our county board budget, looking at some increases in regards to line 22.01. That's for our cows training, our new supervisor orientation programs that happen every other year. Looking at for a $500 increase in that for 2024, and then $700 increase for 2026. There's also a petition for more funding for training to allow supervisors to go off to the annual Wisconsin Counties Associations trainings, as well as other, a little bit closer. Thank Thank you, Linda. How are we there? Good? Okay, thank you. Line 22.02 then incorporates additional funding for added supervisor training for Wisconsin Counties Association, fall conferences, and possibly spring conferences. We have on here a line holder for annual salary for supervisors. It's unknown right now on how those costs are going to shake out. We did consolidate our committees, so we should have less meetings is the idea, but not knowing for sure if that's going to hold true. We want to give it a few months before we can really kind of project to see if there's things we can do with that per diem factor. Now, we also, though, have on here and working with Clerk Kalish, a proposed reduction for volume of posting for board minutes. And this is kind of taking our existing practice of posting all ordinances and resolutions to posting then and publishing just the ordinances and then a revised summary of the resolutions in order to reduce budgets. The Tri-County Airport, anticipating operating expenses, right now we cover operational expenses of approximately $27,555.15. Because we're moving forward with the FFA grant for that ditch building project, we have obligations to maintain ownership with Sauk County out for the next 20 years. Annual increases expecting 8,000, topping up to 10,000 over the next 5 years. Now, there is potential for separation where the county could still separate with Tri-County Airport, provided that Sauk County would still retain ownership, and then we would not have to pay those funds back to the federal government to FFA. But if both Richland County and Sauk County were to relinquish ownership, then there would be a prorated expense, a cost of paying back the FFA the $9 million plus for that project that's going towards the drainage ditch. Ambulance services, the items that you're seeing on here is a combination of adding new positions with the intent of being able to man another squad, another truck for displaced costs of increasing for interfacility transfers. So you're seeing added costs, including then also some costs for new utilities, and then trying to put money aside out of operational funds for the roof replacement that is coming due in 4 years. Overall, for ambulance services, there's an anticipation through the director that the increase in costs should be able to be covered through their increase in revenues, provided that they're able to keep up with the interfacility transfers that are currently being deferred. Emergency management, slight increases to our contract for services, costs for utilities, as well as some maintenance costs with keeping our hazmat preparedness in place. Pine Valley, I do not have any projections on here of increases or decreases as it relates to the levy. UW Extension. So UW Extension on here, it has the line items of Adam Haiti provided a request for about $3,000 of increased operational costs. And this is a non-mandated discretionary type of services, and the proposal on here would call for a reduction of existing funding of $185,000 in levy to be reduced down to $100,000 by 2025, and then reducing it an additional $75,000 then by 2026 to bring them down to a total of $100,000 by 2025 and a total of $75,000 in levy operation expenses by 2026. And we'll walk through some resolutions as well that if finance and personnel and the county board are on board with this, that give directives then to our different standing committees to move forward with these and develop a course of actions to impose them. For our fair and recycling, we're looking at expenses across here again. These are petitions from our coordinator of 2 LT staffs for Fair Week for clerical groups, another 2 for grounds, and 8 for the fair weekend, as well as reclassification of potentially of a fair and recycling coordinator underneath the assumption that we're kind of taking a reclassification of those positions based on the last time that we had the study We did not incorporate quite all the duties that have been building up and adding on there. Now, if we wanted to go even further that and consider a fair and recycling and parks type of a coordinator position, and increasing that and anticipating hours to make up for that, that is also a thing that arrived on here. We have fair contracts increasing to the extent of $1,100. We have sound equipment rental increasing to $1,000. The purchase of a lawnmower versus leasing a lawnmower is seen as a reduction. In using our capital funds to purchase, we're able to offset operational expenses and renting. Annual grandstand inspections to the increased costs of fuel and maintenance together, anticipating $3,000. Increased a facility rental. There's concerns on uniformity for profits versus nonprofits on those fees, so it's not incorporated at this time. Another consideration for increase on storage rental could potentially generate $3,568, as well as if there's an increased event. There's looking to investigate to see if a beer fest can be hosted out there. Overall, and you'll see this through the resolutions, it's my recommendation that fair and recycling be funded in 2024, but then the county consider ceasing all county levy tax dollars for operations and for capitals by 2024. So this is what this proposal is laying out. You'll see on here the lines that are stricken are the ones that are recommending that we do not fund at this time, and there are remaining ones here for 2023. For Parks Commission, same type of a scenario here. There's a petition to have a reinstatement to 2020 tax levy of incorporating the $10,000 that were stricken in this year's budget back on there. My recommendation going forward to the county board is to go the other way and consider displacing our fundings and capital expenses on parks effective 2024, which would be a reduction of $30,000 operational expenses plus our capital expenditures, which we'll talk about later. The same then follows true for Simon's Recreation Complex. It's my recommendation that what we have on here, so working with Tracy, she's got on here some reductions that we don't capture in section 1 for wages and dental and some of our other expenses that we share with the city. So in 30.1, you'll see for wages, dental increases, we have the expenses in full in section 1. This is then accounting for half of that's paid for by the city. 30.01 then has our partnership with the school and businesses and programs. We're anticipating potential revenues by reincorporating about $3,000 worth of services, and then also looking at potentially increasing our membership rates to reduce by 11,000. Regardless, right now the county funds the Simons Complex annually at about $34,291.50. It's a recommendation, and you'll see it in resolution then as well, that we fund for 2023, but then effective 2024, that the county cease levy contributions for operations and for capital. UW campus, there was a petition to restore the maintenance budget out there to the 2020 level, which is $60,000. Okay. We all give you a minute. Good. For the campus, likewise, there's a petition to restore them to the maintenance levels that we were at for 2020 level of $60,000. It's my recommendation that in 2024 that we reduce or that we keep it the same as is at the current level of funding, and then moving forward into 2024, an additional reduction with consideration of UW operating at a reduced footprint, and by 2025, a reduction of all county levy expenditures and operations and in capital improvements.
Mr. Chair, this is Sean. I just want to clarify with the administrator that you're recommending to continue funding into 2023 for these various options, and then stopping in 2024. You've been saying 2024 both times, and I just want to make sure we're all on the same page.
Oh, I'm sorry. Yes. So for Simons and for the fair and for the parks, funding them in 2023, and discontinuation of funding in 2024. For UW campus, continuation in 2023, reduction in 2024, and full reduction of all funds by 2025. UW Food Service, Angie's projecting that they're going to have increased costs in food, but feels that she can increase prices in her sales profits to balance that going forward into the following years. But the fate of UW Food Services kind of follows along with what we're going to do with the campus in totality. Additional conversations, though, that have to be happened with food services is if those services were to stop, what are we going to do with our nutrition program and meals for that, which will be follow-on conversations. Economic development, again, a non-mandated type of services. It's my recommendation that we continue funding that in 2023. It's my recommendation that also with that, you'll see later on that we're using funds from recouping from our housing authority on CDBG funds to kind of visualize and fulfilling our 60% of the contract. But then by 2024, that the county sees levy contributions towards economic development underneath the mindset that hopefully we can position them potentially to work as a nonprofit or some other type of mechanisms and funding to keep those services going. And so all those in totality now, with the needs and with the proposed adjustments for the department levels, you're seeing the totals here at the bottom of section 4. So with the recommendations in place, finance and personnel, you're looking at a 2023 budget where you have approximately $118,000 of availability. We're above gap. I'm sorry, of reduced expenditures, if you will. But in these adjustments, though, we still have to factor in a few different placements here that we'll get to here. So,
Mr. Langreich?
Yes, go ahead.
With regard to county board expenditures, reference per diems, I think that per diems cannot be adjusted during the term being served and would have to wait till the 2024. Is that correct?
I would have to look at it. Right now, we don't have any financial impacts of adjusting those at the moment. I would have to look to see if there's limitations on when they can be adjusted.
Thank you.
So the totals here above section 5, now this line here shows the total impacts to the overall budgets based on those adjustments from the departments. So you'll see right now we're operating with about a reduction of $118,000, which again has to chip away at that basically $1.5 million from the above sections with our different presumptions on revenues and from wages and salaries. As we reach though out in the future, you see that quickly escalating up with the additional expenses there that are going to compound and go on top of that. Health insurance, we still have our petitions out to ETF as well as another vendor to come back to us to see if there's adjustments that we can make potentially to reduce our projections from section 1, but we don't have those filled in as of right now. Section 6 then is our other levers and financial adjustments that may be afforded to us that you can pull and flip and switch to try to balance. The first is tax deed sales. This becomes very limited now with passage of the new legislation. Any type of profits above and beyond county expenses have to be returned to the property owner unless it's unclaimed for so many years, 5 years. So any types of profits that we're going to see from tax deed sales is probably not going to happen. And if it did happen, it would be in a 5-year window on when we would actually realize any types of net gain from those properties. Sales tax, again, we're anticipating perhaps a $5,000 raise in those, which would be an offset. So that is part of our fill. So we're accounting for about $5,000 increase. We have interest income kind of put in here, which you heard from Jeff earlier. If we participate in a PMA fixed investment type of a scheme, could potentially bring in an extra $40,000, potentially extending up to $60,000 from 2023 to 2027. Overall property tax, we're not anticipating any new massive net new constructions other than what's accounted for up in section 2. Wheel tax, it's recommended at this time that wheel tax stay where it's at and be used for that dedicated purpose of chip sealing. And again, that's kind of a transportation tax that we feel should be, continue to be allocated towards transportation expenses. Undesignated fund spending, we estimated about of $268,692 in potential cash non-asset staying in that fund. So this kind of, we want to keep that ratio up of the 25% in expenditures. So it's not recommended at this time that we touch any of our existing undesignated fund balance. We are again using 300,000 of it this year to fill to plug some of our operational gaps. Accounting for additional fund balances, some of the examples is HHS revenue returns from this year that we're tracking. There's the highway funds that we mentioned with Jeff earlier, as well as the Pine Valley funds. Those are fund balances that are forwarded to you that are designated but are not legally restricted. It's not recommended that we utilize those at this time. Now, this kind of touches then on what we approved last night with designation of ARPA funds. So you'll see that we have approximately $673,845 that we're looking at kind of allocating to plug the gaps for this first year to allow standing committees and departments to try to respond to see if how and what capacity services may continue beyond the proposed funding reductions. So you'll see that that stretches out of 1.3 for 2023, and then a remainder of 355,000 going forward into 2024. All funds have to be committed by entering 2025 and totally expended by 2026. So if we knew specifically on different items or operations that potentially could be stretched out to the right year. Opioid settlement, we don't have a firm feel yet for exactly what projects those are going to be able to be attributed towards. We do know that the language, though, is all kind of specific to opiate abatement. So the mindset is that we're not going to have a whole lot of existing programs that we're going to be able to subsidize. Those settlements are really kind of for promoting new services to combat our opiate uses and to try to help people with those types of problems. FE, our Fed infrastructure bill, we do have shovel-ready projects that are kind of incorporated into this plan, as well as our capital investment plans. As more of those materialize, there may be a potential for offsetting of different operational expenses, but really most of those funds are kind of trickle down through the state and are kind of seen as matching 10% local match to make those still work. So trying to visualize using those to offset operational expenses may be a possibility, but as of right now, it's not recommended. Again, in here, then we have kind of separate line holders. Then for Pine Valley, they operate with their operational contingency fund, as well as a capital fund, and then a debt service fund, which is kind of what we've been using for the last few years as our money coming back to us in revenues to supplement other general services. So those are on there. I'm not recommending any more than the funds already talked about up in section 2 for use of Pine Valley funds. Housing Authority, we have an estimated $80,000 in a legacy CDBG fund that sits out there. As talked about with economic development, it's my recommendation that the county pursue in returning those funds back to the county and county control, and seen as using those as funding economic development for 2023 to cover the county's obligations in that partnership. Asset sales on land and buildings. We currently do not have any valued land and buildings that are appraised for market sale, but this is a placeholder. If we enter situations where we want to prioritize some services, we may want to consider liquidation of lands and buildings and using those funds to offset costs associated with the ones that we'll be keeping. Same thing with asset sale on equipment. Now Josh had a spot holder up in his highway departments where he plans on selling some equipment. I don't have any other equipment on here, but it is a line holder. If the committee wishes to consider a reduction in a CPI, as previously talked about, or not potentially doing all the step increases, those things can be implemented, as well as, another placeholder on here is, do you want to implement CPIs and step increases effective January 1st? Or do you want to delay it out into like a July capacity, therefore, thereby relieving 50% of the total impact for that first year? Not recommended at this time, but there is a placeholder in here, and that is a lever to be considered. Another fill that we've included in here is, it is my intentions to issue another 1-week holdback on the third pay period in June for payrolls, thereby putting the entire county at a 2-week paycheck withholding process. Like we talked about with finance and personnel, to date, right now, what many of our departments are paying up to date. So we're filling out time cards of what we think we're going to be working in the next 2 weeks. It's going through administration and payroll processes, and then you're getting paid on the Friday of the end of that pay period, even if you're working like the Saturday after that. So this year in July, we're stretching that out for everybody to be on a 1-week holdback. The following week, then we're stretching that out to be on a 2-week holdback. That pushes approximately $114,000 of levy that would be spent in 2023 out into 2024. So we have it on here as a small gap fill. 221.01 is consideration for if we continue with ambulance services and that stays in-house, there is a levy exemption clause for emergency medical services provided by county municipality. There may be a mechanism there for added expenses on your tax base, again, that circumvent that levy ceiling. And those, there might also be a way then for us to consider how much of a prorated amount goes against our dispatch center. So we could potentially have another kind of a valve on trying to absorb some of our costs for ambulance, whether it's operations and capital, as well as potentially our dispatch services when they're fielding a prorated amount towards ambulance response. I don't have all those things figured out, but there's a placeholder here, and this could potentially be another operational gap filler opportunity. As well as there might be other small opportunities for reduction in operations by pushing, again, projects towards short-term borrowing notes. The one example we did on here, I think, was a refresh on 9/11 software, currently seated as an operational expense. Those different things could be displaced from operationals and put into short-term borrowing. But then that kind of goes down, then you'd have to displace other types of existing capital projects to make that fit or borrow more. Okay, we're almost there. 222.01, petition to approach Ho-Chunk Nation with grants on roads. Have not done that, but it is a placeholder on here. There's utilization of working lands fund, Fund 91, a historic fund that is, for the most part, it's discretionary that we're looking at anticipating to displace some of our costs of $8,000. Another item that we could consider is changes in handbooks of our posting for full-time jobs. If we do reduction in how much we're posting in local papers, we could have another small reduction of potentially $5,000 annual in different publication fees. The last two that are on here, 225 and 226, are not advisable, but they are options to you. And that would be to hold a operations referendum and put the petition and the question out to the people on a ballot. And then the final one is operational notes. You can do the same type of short-term borrowing notes that we're doing with our capital plan. You can legally do it for operations, but it does show up in your EMA report, your electronic account that all of Moody's and all of your investors are monitoring. And it doesn't look so hot when you're borrowing for operational type of purposes, but it is on there. So the balance at the bottom then of where you're arriving at, you'll see down here on the bottom, section 7, is right now the plan is designed with $157,000 of excess right now for 2023. So finance and personnel, if you feel comfortable with those assumptions and the proposals on the plate, away if it's desired to move about $157,000 of expenses potentially back into 2023, but that's built on all the assumptions and including the use of $101.3 million of ARPA funds to fill that. Going forward into the next year, then you see we don't have nearly as much ARPA funds available, so now we're creeping up to $883,000 of fill that we're gonna have to find, 1.5 in 2025, and then 1.2 and 1.7 going out into 2027 of projected added costs. So how are we going to do that? How are we going to manage and get from 800,000, or, you know, from a zero using ARPA funds to where are we finding $1 million+ going forward into the following years? That leads us then to a series of resolution recommendations that I will be making here today and presenting to Finance and Personnel on July 5th. If you look in your folder or online in its items number, bear with me here. Items number 07B through 07H is a series of resolutions giving direction to your standing committees to follow forward with helping solve the problem financially of where we're going to arrive at. Before I get too far into that, let me just follow back up with my PowerPoint to make sure I'm not getting too far off a course here. Okay, so we went through the planner. We arrived at the balance of what's recommended to you folks. This number here is a little bit different on the presentation. It's about $150,000. But the administrator's recommendation balances 2023 with the use of $1.3 million in ARPA funds. Years 2024 through 2027 remain unbalanced, and a series of proposed resolutions will direct the various other committees to work with staff to solve the remaining gaps going forward. Resolutions to direct committees. These resolutions are intended to direct Richland County standing committees and several advisory committees with specific tasks. The first one that you'll see is the strategic planning consideration and services. And then you'll see a course of actions that are to be completed. And then finally, a recommendation that's brought back through Finance and Personnel to the county board. As the first example in here, if you look at item 07B, there is a proposed draft resolution, and I will bring that up to share it here. So this is a resolution notifying UW-Platteville, Richland Leadership, UW Extension Office, and Food Services of future funding reductions and directing the Richland County Education Standing Committee to consider services, develop options, and propose a recommendation on future operations. All of these have the same whereas statements. I'll read the first one here. The Richland County Board accepted the County Administrator's Financial Conditions Report. That hasn't happened yet, but it is what we're doing here today. That illustrated the financial challenges in maintaining all current county provided services. And whereas the Richland County Board adopted a county administrator's financial and capital plan that iterates Richland County's strategic plan calling for prioritization of services and reductions in levy expenditures on both mandated and non-mandated services. And whereas Richland County has received numerous petitions and concerns regarding the elimination, reduction, and displacement of such highly valued services and recognizes the importance of these services, these services have on the community, and is taking action to investigate a possible transition of these services. This first one then is, now therefore be resolved, the Richland County Board of Supervisors, that the University of Wisconsin Extension Office, Food Services, and partners with UW-Platteville have been identified for future funding reductions. And be it further resolved that Richland County Education Standing Committee is tasked to work in conjunction with county administration, supporting staff, UW, Richland, Platteville, Richland, and community partners to consider services, develop and evaluate options, and make a recommendation to the county board on future operations of the UW Extension Office, Food Services, and UW-Platteville, Richland. Be it further resolved that the Education Standing Committee is specifically tasked with the following. This is in regarding the UW campus. The first point is service consideration matrix. And the service consideration matrix is developed through the rules and strategic planning. It incorporates, I believe from page 6, the different questions that we're asking ourselves regarding services, some of those including of the question of, if we weren't doing this today, is it something that we would start doing, etc. If you want more information on that, if you look back at the last rules and strategic planning meeting, we went through that assessment matrix, but essentially filling out that matrix. Bullet number 2 is existing agreement with no levy, so asking them to, or directing them to develop a course of action if possible where ownership of all grounds and property is retained by Richland County, and services are provided through UW Platteville Richland, but in which no foreseeable county levy dollars are needed for any future operations or capital expenditures entering into 2025 and beyond. The other course of development then is an amend agreement to reduce UW footprint with no levy, develop a course of action where UW Platteville Richland operates with occupancy of fewer buildings, and all other property, buildings, and grounds are sold, leased, or are rented by the county as necessary to generate revenues for maintenance of all current campus buildings and grounds retained by the county, where no foreseeable county levy dollars are needed for any future operations or capital expenditures entering into 2025 and beyond. This course of action should also include consideration for future services and location of UW Extension Office and food service staff. Number 4, amend agreement and services, develop a course of action if legally possible for the discontinuation of existing agreement with UW Board of Regents, including elimination of county funding and appropriation or liquidation of all assets, grounds, equipments, and facilities in the best interest of the county. Number 5, develop a course of action if possible that may be a combination of the elements above, but in which no foreseeable county levy dollars are needed for any future operations or capital expenditures after 2024. Regarding food services, again, filling out a matrix for food services. Then item number 7, existing model with no levy, developing a course of action where possible, where services are provided to UW Platteville Richland nutrition program and community, but in which no foreseeable county levy dollars are needed for any future operations or capital expenditures entering into 24 and beyond. Consideration must also be given for future maintenance and ownership of the Copper Top building. Then the second one is number 8 is to develop a course of action for the discontinuation of existing services, including the elimination of county funding, reassignment and separation of existing staff, necessary changes in policies, and appropriation or liquidation of all assets, grounds, equipment, facilities in the best interest of the county. To the same to the same Education Standing Committee then regarding UW Extension, we're doing the service matrix, but then also directive to develop a course of action for prioritizing services to operate at $100,000 by 2024 and $75,000 of levy by 2026. Be that further resolved that the Education Standing Committee Chair, through the powers established by sending agendas, is responsible for completing these specified tasks no later than June 6 of 2023, so a year or so from now, to Finance and Personnel Standing Committee. And be it further resolved, the Education Standing Committee is unable to complete these tasks and deliver a recommendation to the Finance and Personnel Standing Committee by that date. The Richland County Administrator is tasked with working with UW Platteville Richland leadership to dissolve the current agreement with the Board of Regents effective June 1st, 2025, to include ending educational services and elimination of all county funding, releasing or reassigning any county staff, preparing necessary policy changes, and appropriating or liquidating assets, grounds, equipment, and facilities in the best interest of the county and under the guidance of the Personnel Committee. Number 2, the administrator would be tasked with a dissolve of food service operations effective January 1st, 2024, to include the same eliminations. And then number 3, reducing UW Extension Office county levy to $75,000 by 2024. Be it further resolved, this is be effective immediately upon its passage and publication. So that is the first resolution specifically towards the Education Standing Committee, and then directed at the services they oversee through UW Campus, UW Office Extension, and Food Services. Yes, sir.
Got it. Okay, I'm going to interrupt Mr. Langrick right now because we've covered we've got 7 resolutions like this. The first resolution, I believe, may be the most, I don't want to say contentious, but at least require the most discussion. And I'd like a show of hands from members of the public. Who is here to speak on the campus? Give me a hand. Right now, yes. I'm inviting public comment right now. A 2-minute, since you're here, I mean, I thought while you're here, you should be allowed to voice
Mr. Chair, I'm sorry to interrupt. I
Go
know
ahead, Sean.
it's important to hear from the public, but I have to step out here for a work meeting. And one part that I feel was unclear about the presentation was going back to the bottom line on each of those future years. Looks like we have some extra money to play with in 23 and maybe 24. I don't know if that can be pulled back up, but then we would have to find additional cuts to make in 25, 26, and 27. I got the impression that the way that Mr. Langreck worded it was that if we passed all these resolutions, we wouldn't have to make those additional cuts in 25, 26, and 27. But I believe those were already incorporated into his calculations. So if I'm understanding this correctly, what would we do in those years 25, 26, and 27 to fill those gaps? I didn't hear anything about that.
Mr. Langred?
Yes, we haven't approached that part yet. So the resolutions that we're going through here incorporate the cuts that were laid out, for the non-mandated types of services, including fare, including the campus, et cetera. The additional resolution that you'll see in here is 07H, and that's a resolution for various standing committees. And essentially what that resolution then is going to be directing the Public Works, the Public Safety, and the Health and Human Services and Veterans committees to all figure out a way to cut $350,000 approaching into the future years, as well as then directing the Finance and Personnel to find $200,000 from administration expenses moving forward to arrive at about a $1.25 million of reductions then to try to make up the existing gap that's going to exist even past our reduction in these non-mandated services. Does that answer your question, Supervisor?
That does. Thank you, and I'll look forward to watching the next 30 minutes when the video is recorded. Sorry, I have to step away.
Okay. I had asked for public comment, but if okay, we have someone online. Who is that?
Hi, this is Emily Dolan.
Hi, Emily Dolan. Thank you. And what do you wish to speak about, Emily?
I'll speak about the campus briefly.
Okay. And please keep your comments to 2 or 3 minutes, okay?
Sure, I would love to. So I just wanted to introduce myself. I'm new. My husband and I are new to the community. We were in the meeting there just a few hours ago, and I've joined remotely. I wanted to speak on behalf of reducing funds to the community. I'm the marketing and communications director in the school district, and the campus here is one of the big benefits to our students. Our partnership with the campus and Southwest Techs offer our students here at the high school opportunities that they wouldn't otherwise have. And to me, as a new member of the community, I came in really very excited about the possibility of what that provides for our students, especially in a small community. This is a very unique opportunity to have that campus here. So I would advise against any cuts to that. The other thing that really sticks out to me is the economic development piece. To me, it seems like I understand the budgets are very, very tight. It seems very reactionary rather than saying, how can we, grow this community? How can we attract people from, like my husband and I, who moved from Madison to this community, with remote work being a new opportunity, and my husband being one of those people who works remotely, being able to move somewhere where there's more rural, it's a higher quality of life, we believe, and really being able to live the life we wanted to live. It seems like these policies of cutting these services, cutting the economic development piece specifically, and the services to the campus are a much more reactionary approach rather than saying, how can we grow? How can we bring more people into the community that would bring, more money then into the community as well?
Thank you. Thank you. Anyone else? Yes, Linda.
Hello. I just have a question. This is just, today is just, you're not taking action.
We don't intend to take any action on the
Okay,
resolution
because
today.
I'm not, I didn't prepare any,
But
thing.
well, I'm not asking you, I'm asking public.
yeah, I understand that. I just want to know if I'm talking to whether you're gonna take action today, that's all I wanted to know.
No.
I don't really know the woman who just spoke, but I understand we have to make some decisions, and I guess that's why I had last night proposed that we go again to the county and the legislature and all that, because I do feel that since 2010, when we had a rating of A3, and when the state government sort of changed its approach to our counties, our education, and our quality of life, especially what it is here in this county, that has impacted us, and that these cuts, which I am not totally surprised by, but I'm a little bit shocked by the parks one, that we do need, as she said, better than I'm saying, that we still need to reach out to see if there's other ways. And I don't think we've actually spent much time going to the legislators and actually talking about it, especially since Mark Lane is head of the Finance Committee and is our representative here. And I've asked for that when we redid our county, our restructuring, that we had a liaison person or a liaison committee, and that was ignored, but I think that's still very important. So I feel that all of these major resolutions are definitely going to lower our standard of living in the county. And I think that we need to not be so reactionary and try to figure out other ways. As to the campus, I am hoping that UW-Platteville, with change of administration, will start to take a different tack of how things will go at the campus, and that we will be working with the tech schools and with other entities, and that it will be coming back. And so I'm glad that we have 2 years. Is that what I understand by your resolution? To make any definite decisions?
The UW campus calls for a reduction at 2024 and then a
Yes.
full removal of funding in 2025.
Yes, and by that time, though, as chair of the committee, I'm supposed to come back with an idea about the buildings and the grounds and finances.
By next year, June.
Yeah, June 23rd. So, I will take all that seriously, but I hope you guys will, as a finance committee, take very seriously how most of us want to live in this county, and that this is all taking away our quality of life here, even though they're not mandated. And I ask you to be very considerate of all this. Thank you.
Thank you, Linda. While we're on it, any other comments regarding the campus? Yes. Can't hear you, gotta go to a mic. You know how we operate, we gotta have a mic.
When we moved here a long time ago, we had a choice of, we came from Lower Michigan, and we had a choice of Spring Green, Christian Center, Muscadet. And we looked at all three very seriously and decided that because at the time it was a very good school system, was number one. Number two, it had looked forward to being a vibrant cultural community, and the campus was the number one positive for that. So we decided to come to Richland Center. Well, unfortunately, it was 20,000 people in the 1980s, and it's only 17,000 now. So I do understand that we have a budget problem. This seems very radical to me that we're just cutting it out. I know we need the money. I know we have to come up with some solutions, but saying we're going to totally stop supporting the UW system to me seems ridiculous. I think that we have to do something to show the young people around here that we do care what's going to happen. We want them to stay here. We want to have new housing. We want to have new businesses. But cutting things out like this, to me, is not the way to do it. My opinion, I know we need the money, but I would hope that we do as Linda said and really seriously try to make this better rather than just cutting it out.
Thank you. Thank you. Anyone else while we're on this topic? Yes, Dorothy.
Is this on?
Yes, it is. It
My
is.
name is Jean Burkett. and
Yes.
I'm not on your committee, but I do care about.
You're the public.
I'm sorry?
You are the public.
Okay, is that better? Sorry. I taught at the campus for 22 years, and I realized it wasn't there for me to teach. It was there for all the students, some of whom are even in this room. Richland County has had higher education since 1902. And the citizens of Richland County have felt that higher education was important, and I would hope we would not abandon that high hope for young people, that they can get 1 or 2 years here before they go on to or go into the workforce. I taught at the campus, and I see in our community doctors and dentists and nurses and teachers that I have taught. And I just think, I know it's a budget issue. I know you have to work that out, and I'm dumb about things like that, and I admit it. But I think we need education as much as we need roads and ambulances and things like that. I think it is highly important, and the only way our county is going to become more positive and perhaps attract more people. And thank you for letting me speak.
Thank you. I wanted to reward you for sitting here all day and allow that. Anyone else? Yes, sir.
I would just speak as a person who had a daughter who attended UW
Can
Richland.
you identify yourself, please?
Oh, James Schneider. I live in Gotham.
Thank you.
And I was a charter member of the University of Wisconsin Baraboo, the 2-year campus. And without that opportunity, I wouldn't be standing here today. Now, I realize that's in Sauk County, but I live in Richland County, and my daughter had the opportunity to go to the campus for 3 semesters. And that was a way that my daughter and our family was able to afford completing her college education with no student debt. Because what I could give my daughter was the opportunity to live at my place for 3 semesters and reduce the cost of education. Could she go somewhere else? Absolutely. But could we have accomplished what we did without UW Richland? Absolutely not. It's more than just a dollars and cents thing for the county. I pay my taxes here. I pay them gladly because of the services that I receive. And that's one of the, an absolutely essential one for our family. Thank you.
Thank you. Anyone else? Okay. Moving forward, we've had public comment, future agenda items. Well, every one of these resolutions will be an agenda item. I think Administrator Langrick, what would be appropriate here is to have a motion, and, well, we don't have Sean anymore. Do we have a quorum?
No, we do not have a quorum for any type of
Okay.
action, Mr. Chair.
Well, I was going to suggest that we have a motion to accept your report and then move the the resolutions then to a future agenda.
With this point, without a quorum, that's kind of what we're gonna do, kind of de facto.
Yeah,
is
by
I'll-
de facto, that's what's gonna happen,
I'll
so.
be pushing them forward to you folks then, and early in the meeting then for finance and personnel, prior to entering discussion, I'll ask for you to accept them. That way they become kind of a property of the body, and then any type of adjustments or changes then would have to be made by action through the body.
Thank you. So, it's been a long day, and I will entertain a motion. Please read the resolutions, and I know all of the finance people have read them, and
I still
interested
have-
board members.
I've got resolutions, and I still have a capital management program to go through, as well as some closing remarks.
Oh, okay, well then we'll
I will try to speak through the
Defer to you then.
resolutions then in brevity. The next one then you'll see then is 07C regarding fair. This one,
Mr. Chairman, can we continue without a quorum? Is that legal?
Yes, we can if we don't take no action.
yeah, consider it, from this point on, this is a public presentation from your administrator and a county information sharing. There'll be no action taken by finance and personnel from here on out. The next one then is directed at the Fair and Recycling, the Richland County Fair Recycling and Park Standing Committee. Same whereas is, you're looking then for the same type of guidance and directions given to this committee for fair operations of completing the service matrix, develop a course of action to see how the existing model can work with no levy in entering into 2024 with no levy expenditures. There's also then a directive for 3 to transfer operations with no levy, meaning that the county would retain ownership of grounds, but in which a third-party entity is managing operations. Then in item number 4, you have separation of ownership and operations with no levy, so that the county no longer is owner of properties or operations for the fair. Number 5 is to an end service. And then number 6 is again a course of action that involves a combination of elements, which again arrives at the county not having expenditures of levy for capital and for operations as of 2024 and thereafter. Recycling operations a little bit different as they operate off of their proceeds and grants. So you're looking again to ensure an existing model is in place with no operational or capital expenses that go beyond 2024. Or are there some type of combinations and playing hand in hand with what would happen with fairground operation as well? For parks operations, same, you're looking for a service matrix completion, as well then as what would the existing model look like with no levy impact by 2024 and beyond. Then you have a separation of ownership and operations with no levy for 2024 beyond. And then an ending all services where it would not be transferred off, but in fact ending those types of services. And then you have a combination element underneath bullet number 14. Likewise, then with the previous one, you have some ultimatum language where if these are not completed by the chair of that committee by June 6, 2023, then the administrator is tasked with dissolving and separating fairground operations, separating or reassigning recycling operations, and dissolving and separating from parks and trails operations. Resolution number 07D in your folder is one that is actually directed at a city-county committee. Committee that doesn't meet too often, but entails then doing the same type of investigations for our joint partnerships with Simon Center and with Economic Development. Again, the same types of a language then for the joint city-county committee of doing a assessment on the service consideration matrix for the auditorium, of having them exist underneath the current model with no levy contributions by 2024. Another course of action development for separation of ownership and operations by 2024, ending services or some type of combination thereafter. As well as then a communication directive that development should involve communications with both Simon's Auditorium Board and the UW campus regarding options and opportunities for future funding sources and possible property transition. Economic development, the same type of an approach then of completing the service consideration matrix, existing model with no levy if possible, and sharing our continued partnership with the city. Looking at a nonprofit model with no county contribution. Develop a course of action if possible where there may be any type of a combination, and then again communication involving Richland Economic Development Board regarding options and opportunities for those services. You do have then ultimatum language built in for the administrator, where if these things are not completed by the same June 6, 2023, that the administrator is taking actions with city administrator to dissolve partnerships and then separating services and liquidating assets and grounds. 07E is one directed towards an ambulance committee. This is not a standing committee. It's one of your advisory committees for joint ambulance. Same language type on top, but you're directing them to do a service consideration matrix for ambulance services. And you're directing them for a zero levy for operations and capital expenditures, effective January 1st of 2024. You're also, though, asking them to develop a business plan where they can operate autonomously. You're also, though, looking for a course of action development like we had talked about with utilization of the levy exemption clause to see what types of expenses could potentially be considered for that levy exemption to include offset costs for the Sheriff's Department through Public Safety Committee. The resolution in here, 07F, is to land and zoning. Land and zoning is going through reconfigurations right now, and the plan from the administrator does call for consideration of reduction of 1 FTE moving into 2024. This, though, does call for an additional look at how to free up $50,000 of restrictions, knowing that even past these recommendations by resolution into our discretionary type of services is Supervisor Murphy Lopez pointed out, we're still left with an amazing gap that we have to bridge going forward into 2024, 2025, and 2026. So as part of trying to address that, even past, this directs the Land and Zoning Standing Committee to figure out a way to do a reduction in our overall projected expenditures entering into 2024, and those are sustainable reductions. 07G is a resolution then to your Pine Valley and Child Support Standing Committee. This one's a little bit different. It's directing them to do a service consideration matrix, but then it is directing them to explore and develop a course of action for contracted services for the community village. If possible, where operations of healthcare, administration, IT, medical equipment, and maintenance services are contracted out, and the ownership of all grounds and buildings remain under Richland County. Such potential lease operation agreements should include a guaranteed lease revenue to the county, reduced operation risks, and defined future sale of the buildings and grounds. So this will be presented as an option to finance and personnel as potentially a bridge mechanism. With the outstanding debt service that we have with that building, it is not going to be feasible for any type of a third party to buy our operation on whole for what we own yet on the bonds and be able to operate that at a profit. As potentially a bridge solution, the county could consider owning the buildings, having contracted services operate that while you continue to make debt service payments, and then bridging at potentially a 4 to 5 year window then where who you have operating then potentially could buy the entire facility and then own and operate that. But as it kind of alludes to in the plan, you would have reduced risks, but you're also going to have a reduction in potentially in those operational funds that are currently coming in from Pine Valley to offset some of our other service expenses. And so the final one that I just talked about here with Supervisor Murphy Lopez, resolution 07H is a resolution to various standing committees. As pointed out, even with ending the services on discretionary services of Parks and Simons, UW Campus and Fair, and reductions in UW Extension, we're still left with an amazing gap to fill. And so how are we going to fill that? So this resolution then calls for essentially for Health and Human Services and Veterans Standing Committee to execute the same service consideration matrices for their services, and then imposes on them to figure out a $350,000 levy reduction in projections by 2024 that are sustainable. It does the same to your Public Safety Standing Committee, imposing $350,000 of reductions to be sorted out through, how are we going to find it, through the Sheriff's Office, Clerk of Courts, Coroner's Office, District Attorney Office, Register and Probate's Office, Emergency Management. The resolution then also calls for Public Works to do the likewise the same practice of filling out the service matrix and finding $350,000 through the Highway Department, Courthouse Maintenance, and Management Information Systems. And then you have finally Finance and Personnel Standing Committee tasked with comparable of performing a service matrix and finding $200,000 of sustainable reductions from county administration, from the county clerk's budget, county treasurer's budget, and then county board and ancillary budgets that we also manage. So all of these numbers, of course, can be amended in such or not adopted as all, but this is part of the package that's being brought forward to Finance and Personnel on the 5th as a mechanism of trying to figure out how to solve bridging the gap once our ARPA funds are depleted. Returning to the PowerPoint. Just a second here. Okay, let me open this back up here. So let's transition now into our capital improvements program. And so everything that we just kind of talked about in these resolutions are mostly based at the information we covered with our operationals budget. Let's talk about the capital improvement side of the house. So a review on your footprint. These are the major infrastructure pieces that Richland County owns. Many of you saw this during the orientation education that we have, but this is kind of a looking at a map type of a view. This is our Richland Center Valley. On here, you'll see little cutouts here where you have your infrastructure out here with your highway department. You have your infrastructure out here with your fairgrounds. Off to the side here, you would also see the rifle range, etc. And there's different other pieces with sand lots and all kinds of other pieces. But as far as major infrastructure pieces, you've also got your ambulance garage recently purchased on 7th Street. Out west of town, you have your Simon Center, as well as your campus complex, the attached agricultural land, and then the forestry up on top of the hills behind that. Downtown here on Seminary Street, you have the Health and Human Services building and the Courthouse and Government Services building, that campus. South of town, then you have your Pine Valley campus, as well then as if you go all the way to Lone Rock, you're joint owners on an airstrip, the Tri-County Airport. So these are all the pieces that you kind of own, and additionally you have different parks and trails that are best referenced. If you head to the website there, you can pull up maps on the different trails, parks. There's other little bits and pieces of lands that the county also owns, but these are the major pieces. In looking at this map and to appreciate it, the mandated services that were required to run by statute are the HHS courthouse and jail and the highway building. The rest of these are discretionary types of services and properties that we own by choosing. They're all very good things, as we heard about with attractions and comments made through public comment. They're all amazing services and we do cherish them, but do keep in mind the things that we are obligated to by state to run. Two of these campuses provide a majority of those services. So the capital improvement program that we're going to review today, it's built on these assumptions. It's built on us partaking in the $8.5 million radio tower project and borrowing, and continued also with a short-term $1,050,000 annually borrowing for notes. It's also built on the assumption of about $500,000 of annual appropriation to our highway road infrastructure. It's built on about $230,000 estimated annual appropriation towards their share of fleet and also for their management of the 911 system for the upgrades and softwares and such. And then it's also built on a roughly $70,000 to $250,000 annual apportionment to MIS for our computer infrastructure to keep up with all of our data processing and securities and replacements, etc. So the plan then also is built on deferring capital projects from Simons, from UW campus and fairgrounds, and a few from parks, unless we can find other levy solutions. So as we walk through it, in order to balance it, those were the types of decisions that are proposed to you to consider and will be, I should say, proposed to Finance and Personnel on July 5th for consideration. So this is the cover, the dashboard for the entire program. It's broken down on the left of trying to capture all the current identified needs and requests made on behalf of the departments. It then captures then the total of projects identified for funding. So what is our need? What have we decided we're going to spend money on? The next three lighter colored greens then kind of identify from a levy perspective, or the sources that they're going to come from. The first one is operational levy. The next one is proposed funding from a debt service levy capacity. And then the final one is from some other type of sources, whether it's from a grant or from other types of contributions. The next column then captures your deferred or declined improvements. These are the ones that the administrator is recommending that we do not do without, or departments are recommending that we don't do without, and we are not going to fund those projects. Then the next three then capture what capacity you have left. It's capturing the number of your total debt that you have existing. It's capturing then your total remaining legal debt capacity. And then it's capturing kind of what that percentage ratio is. So moving forward into the next year here, you'll see captured underneath the presumption of, again, having $8.5 million of radio tower project and $1,050,000 in short-term notes. You'll see that we have about $11 million in needed projects, and we're going to fund, 11.6, and we're going to fund about approximately 11.4. You'll see that 500,000 and change are going to come from operational type costs. Then you have the borrowing, and you can see there the $9.5 million in borrowing. That first year accounts for that $8.5 million radio tower project, plus then the $1,050,000 annual. Already pressed a button on his iPad.
Sorry.
It's okay. Okay. Nope.
Follow along.
I'm going to continue on. Hopefully it doesn't get too echoey. The following years go down, you'll see then we don't have the radio tower project included in there. So our numbers then on the fourth column over for our proposed funding kind of trickle back down into that allocation of that $1,050,000 to make everything work. And stepping away from the slideshow again and going to the actual plan, if you look underneath your folder or on the website, it is the item number 6 underneath there, the 2023 to 2033 capital improvement program. And it has kind of laid on there then which projects are proposed to be incorporated. Page 1 is the cover sheet that we just went through. Page 2 is just kind of a light graphs. It incorporates what our needs are versus what we're funding. And then the second graph identifies then for what we're deferring and how much legal capacity we would have to impose potentially to cover those projects. We have the highway projects that are laid out there. Again, for the most part, it's looking at $500,000 annually to cover highway projects. Moving forward to the sheriff's department, again, looking at about $200,000 and change to cover fleet management as well as Spillman system improvements for our 911 communications. For the jail, we have action in 2023 for shower repair and jail painting. Dispatch center, this includes the $8.5 million for the high ground 911 call archiver system box, plus the improvements to the radio tower project. Note that that's all then coming out of general obligation long-term debt borrowing. Courthouse maintenance, you'll see the items there that are queued in the correlating years. For 2023, looking at $41,000. Bigger projects coming in the realm of 2024 with improvements to the chiller system. And then we also have a boiler system queued in for in later years. HHS building for 2023, addressing the HVAC system, which we've known has had problems for several years now. The county tech budget, this is kind of a bigger piece, like I had mentioned. It deviates back and forth from about 70,000 to a higher year of 200,000. Past county tech budget, then we're getting into land conservation where there's no identified expenses. Emergency management initially had a replacement vehicle, $65,000, but is now working with a highway department on kind of using one of their hand-me-down vehicles. The concept is that Darren will procure a used vehicle from highway, use it for several years of lifespan, give it back highway to sell off as an asset and kind of exchange it out and get a new vehicle. Did I mention that right, Darren? So kudos to Darren to find kind of a workaround rather than buying and investing in another $65,000 truck. We should be able to use kind of what we have. Replacement ambulances, you'll see most of the ambulance expenses are coming from impacts on service fees or for federal grant and state funding. Moving into Pine Valley, again, most of those are seen from coming from service expenses and monies that they are bringing in-house to bolster their capital, their internal capital fund. Fair and recyclings, you'll see on here, there's 15,000, 10,000, and 10,000 for 2023, which are again recommended for deferment. 2024, $215,000 of projects recommended for deferment. In 2025, $30,000 recommended for deferment. UW campus, $100,000 of 2023 recommended for deferment, $400,000 of 2024 recommended for deferment. 2025, $180,000 recommended for deferment. 2026, about $230,000 of needs recommended for deferment. 2027, $180,000 recommended for deferment. Simon Center, 26,000 and 27,000 recommended for deferment in 2023 and 2024. $46,000 recommended for deferment in 2025. $205,000 recommended for deferment in 2026, and $2 million recommended in deferment for Causeway project for 2027. Airports, I'm not projecting any additional costs right now outside of the large trench or the drainage ditch that's going in. Parks, we have in here included yet, projects for, that they're tracking of $40,000 for next year of needs, which we're incorporating. That stays in here unless we do go forward with, again, separating for services with parks. I don't have anything for county administrator. So again, that is the recommendation that's going to go forward to Finance and Personnel on July 5th. Let me get back to my presentation here, if I can pull it up. Where's my cursor? And I want to share. Hold on a second. Okay, share PowerPoint. Move this. Okay, so that was the capital improvements program. I'm now going to transition and let's take a brief look at kind of putting this again in context now of why are we here and what's it like for other counties? Are they kind of in the same boat? So Assistant Dell has put together a couple slides on a survey that kind of puts now Richland County in context of other neighboring counties that responded. I've got them warmed up for you, Cheryl, so go ahead.
Hello?
There we go.
Okay, whenever you're ready, you can go to the next slide.
Okay.
You have control.
All right.
Okay, the colors aren't real good, but I surveyed 23 counties. We did all of our neighboring counties and then the ones within our population to try and get a feel of where everybody's at. The pink highlights where we went to, and then there's a green circle around that you can't see with the colors here to show who actually responded. We only got 8 responses. So then when I got to this one, I put them actually in the order of population here. You can see this is the yearly revenues that they're anticipating, the yearly expenditures, and the levy limits. This is the employees that they have on staff. You can see Richland County is a little high. If you go to the next screen, this will explain some of it. Again, we're showing our populations. We got us highlighted. And we're showing non-mandated services of what all the other counties that responded have. And I think where we're picking up all the extra people is nobody else that responded has a nursing home. Although several do have UW extensions, nobody has a campus in there as well, but I don't think we have too many employees counted off that. This is showing who supported any economic development and how much they put into it. Showing who has a fairgrounds and how much they levy towards those fairs. And then future compensation, showing what they're doing this year and then some future stuff. So we're all kind of in the same mix with everybody else. This one up here, Price County is actually looking at some self-insured, so that could be interesting to watch. About half of them support an economic development, and then half of them are looking into insurances in the future. I will point out, for the population, it was Burnett County says they must have a lot of tourism. In the summer, their population actually jumps to 45,000 with tourism. So if you go to the next page. And this should kind of wrap it up. We looked at wages comparisons to these other counties and tried to bring across some things they have. We couldn't bring in, of course, a CNA, anything like that, because there was only one other one we were able to compare to. So I didn't even put that in here. Bayfield just sent us their wage scale, so I had to kind of bring off their wage scale what I thought we were comparing to, but the highway patrol operator wasn't in there listed as anything I could break it down to, nor the deputies. So I'm assuming because the deputies are probably union, they're probably not even on the regular wage scale, but we're pretty much in there with the rest of them. There are some that are a little, up or down, but we're right in the mix of all of what's going on with the rest of the counties in the world.
Okay, thank you, Cheryl. So again, that's kind of just trying to put it back in perspective on, as we went through the last several hours on our trials and challenges that we have facing us. Are we the only ones that are trying to face these? And at some point, yes, and at other points we're in a crowd. But we do know that we have a lot of different services and we're stretched out on trying to cover those. I had a couple slides in here added from Director Magid with Southwest Regional Planning. So we asked him to kind of do a brief summary on some of the population net new construction trends, again, to kind of put it in perspective, put some context around it. We know we have a 4% decline in county population from 2010 to 2020. We know that we have a 4.3% growth in population for folks over 65. We know that we have 3.9% fewer births. We have a decline in our birth rate from 2008. And we know that we have a 0.79% 10-year average in net new construction growth. Now, again, that's different from the other numbers that we showed earlier in the presentation that had to do with equalized value. This is really centered on that net new construction, which again is the number that gets factored in with the county's ability to raise a levy limit for operations. So consideration of net new construction, this was a note that Troy had sent. The Federal Reserve aims at a 2% inflation per year. If Richland County were to try to meet that, that same 2% with consideration for salaries, healthcare premiums, asphalt, etc., they would have needed to grow our net new construction by an additional 1.33% in 2021, or equal to an additional $16,863,704 of equalized value. Or to put it in kind of perspective, approximately 2 new Walmarts in order to kind of meet that growth that we know that we're experiencing with inflationary factors. Richland County came in 66 of 72 counties for net new construction growth in 2021. 63.5% of net new construction came from residential construction and only 7.07% from commercial. There's no growth from manufacturing. Economic development alone isn't enough to address this, since the needed growth is beyond reasonable expectations of the current time. Hear much talk about the need to increase economic development and agree with that. However, I can't see how it will be sufficient to meet our needs. Collaboration and consolidation is the key. Coming from Director Magid. He references here then the source of where we're gathering net new construction. You'll also see then there's an additional presentation from Southwest Regional Planning, which kind of dives more into, again, those demographic trends and projections. But as our one public comment said, I think economic development is important as well, but the idea that we're going to be able to grow our way out of this problem and somehow catch up and manage all of our expenditures it's not feasible tomorrow. And unless there's some type of huge overnight explosion a good explosion coming, we're not going to be able to approach it with, we're going to grow our way out of it. It's the main point to take away. So timeline and decision points. You heard the administrator's presentation and recommendations. And again, thank you for supporting staff, MIS, all the departments that helped in putting this together, all the supervisors and public folks that have endured listening to it today. County financial condition report is delivered, Mr. Chair. Financial planning, capital planning, and directives and resolutions and recommendations will be brought to your Finance and Personnel Committee on July 5th. It's anticipated then on July 5th for Finance and Personnel to have discussion. Other supervisors and committee members are anticipated to be in attendance and join in those discussions. Certainly we'll be trying to make that meeting public as well. I think we have this building laid on for July 5th as well, and trying to do the same type of a format here and then allow for some space for public to come and join. Committee may take action to recommend a plan and resolution to the county board, which would, if were to follow, would be June 19th. That would be ideal. We would have an idea then of what the directions are. So then when we come back to Finance and Personnel on August 5th, we would be able to then lay out guidance, our appropriations guidance to our departments in anticipation of then building the 2023 budget. So I will leave it there. Again, it's a plan that is balances our hope for solutions, collaboration with partners, and needed actions for future fiscal solvency was kind of the approach that I was trying to take. It calls for a lot of considerations on reductions, but it's also kind of designed to give us 12 months to try to figure out how can we solve these problems financially with other funding sources other than levy to potentially have those services continue in the community. The other options on the table are, of course, to potentially raise borrowing or do other reductions in mandated or non-mandated services to preserve those that are of highest priority to the county. So I will not, I'm not going to turn it over to Mr. Chair as if it's a meeting going on, but I'll turn it back over to Chair Brewer at the county board to see if he has any closing comments.
Well, Administrator Langrick, you've given us a lot to think about, that's for sure. And as supervisors, I urge you to talk to your public, find out what they think about things, and be ready to tell us as we forge ahead, July 5th and beyond. So these are very, very important considerations. Future of the county depends on it.
Yeah. Marty, can I make a comment?
You may.
Thank you. I just want to commend Administrator Langrick for an incredible amount of work that went into this. And this is what we hired him to do, is to help guide us through the process of making some very difficult choices that we knew were on the horizon. And so he's pulled together a tremendous amount of information for us to look at. And the hard work is now going to fall on county board members and department heads and the county staff in planning and looking at ways we can move forward to still deliver services within a budgetary framework that we can make somehow work. But again, I just want to recognize Administrator Langrick for the job he's done thus far and understand clearly that the challenge is in our lap.
Thank you, David. David Turk, Supervisor. Yes, you have a comment.
I do. Can you hear me? Okay.
Yes.
I guess I just have a couple questions, just I think moving forward that maybe the county board might want to address to the public is, I actually attended the Economic Development Summit, and what was projected there to the community is not what's being projected here to the community. It really kind of contradicts itself quite significantly. And I understand that we can't just snap our fingers and grow our population and our businesses. However, I'm your coordinator for your fair and recycling, And also the parks have just come under that as a standing committee with Kathy still overseeing that. However, when you start taking your parks away from your community and you take away your fairgrounds, that actually offers education to your children in the community and to your community members through FFA, through 4-H, through just community service as a given to teach those values to our youth is something that we're going to lose. So I'm not really sure where we're going as a county on how we want to grow our county and how you expect to bring people to the community if we're cutting those things as well. Also, I'd like to say that with cutting those, you're also cutting potential revenue. I think there's great potential out there for your parks and for your fairgrounds that I would hope that maybe strategic planning or even finance and personnel would maybe sit down and talk to the Parks and Recycling and Fair Department. So maybe we can try to make a plan going forward and not just put us on the chopping block as a whole and get rid of it completely. So I do appreciate everyone's time for everything that you put together, and it's very insightful, and I definitely would not want to be in your seat, but I do appreciate your time. Thank you.
Thank you. And I think this is probably the first time in my 8+ years on the board I've ever seen everything put together at the same time. I mean, it's all there now. And we always had an inkling, well, we're considering this, but there's more, isn't there? And yes, there is, and here it is. So with that, I'm going to say we're done for today. We won't adjourn, but we're done. And Clint, you've accomplished what you needed to do. You've made the report and you got our attention.
Thank you, Mr. Brewer.
Oh, yeah.